Hi guys, welcome to this week's episode of Earnings Season. I'm at RT Row, Randy Row, and we have
Danhai Hall at Danhai.
There we go. And this week we have our favorite guest,
Everybody's favorite guest.
Yeah, the most requested guest. Sometimes I've started wondering if it's his podcast or the man himself, Ryan Strachan.
Five Sole.
That's
Good
right.
evening all. Great to be back, guys.
Yeah,
man, good to
heavily
have you.
requested episode, yeah?
Word.
Yeah,
All
so
right, all right, let's do it.
Yeah, we decided to just run a little bit of the usual conversation that people are always asking us for. So we're starting off nice and simple. I guess it's just money talk again. Money talk with Five Sole.
Money talk.
Yeah. Have anything you want to talk about specifically, Ryan, or you want me to go through it normally?
We can do it normally. I mean, I think the market recently has had some strange occurrences, and then particularly when we consider what we spoke about last time,
Mm-hmm.
it's very cool to see like what we discussed and what has happened since. So one thing was MPC, and we hear about the rights issue, and I think another thing was Scotia, but there is something else that I think I'm missing. Will come up, I suppose, during the show.
It will, and I'll check the show notes out. By the way, it throws everybody who's been checking the show notes. I mean, they're annoying. I said to I did it myself, but I know it helps a lot of people. I know it helps a lot of people with knowing what we're talking about. So, you check, you see, you hear Ryan to MPC, all of a sudden, you check the show notes for this, you'll see probably a little story on MPC. What did we talk about the last time, Ryan? What we said about MPC?
I think with MPC, we're just talking about the dividend and the fact that some of us may have missed it, and that it's really appeared to be a great opportunity.
Come on.
And there were no shares available. So when when people like us were looking, I think one of us got that. It wasn't me, but
At this point, I can't say nothing because people, if it's not you, it's just me. Then I left and we don't want to.
Nobody's gonna confirm or deny, but I wasn't one of the lucky ones. So I know for sure the demand was like robust, but obviously there's a secondary listing coming up. I'm sure we'll know about the form of it, but that jumped out at me. As a kind of follow up, we know what we're talking about. It seems so.
Boy, it would seem that way. I mean, I know you know what you're talking about, but I'm happy that other people could have seen opportunity for that. I will. You know what I noticed? I'm not gonna go too straight into it. Let's talk. Tell me, what else has been happening? Nothing big. People talking. I've seen a lot of noise now around too. So we had a listing since the last time we talked. Yeah.
Yeah. Well, what QE?
QE, yeah.
QE. That's what you guys call it. QE.
I'm still calling it QWI. But
Yeah, I still call it QWI also.
yeah, I saw Khalila's interview with John Jackson.
Yeah,
and
big up Khalila. Khalila Enriquez. Yeah, shout out to Khalila. Khalila's been doing a hell of a job.
Khalila Reynolds.
Khalila
Reynolds.
Enriquez Reynolds, but Khalila Reynolds. Apologies. The lady, the soon to be.
She would have corrected you. So
she would. Yeah, man. Big up Khalila. I rate her. I rate what she's been doing.
Definitely.
And I rate her since, man. So shout out to Khalila.
You're saying that, I think.
Oh yeah, man. They confirm. John Jackson. They confirm what they call it in office, QE.
Right.
So yeah. So I'm still saying QWI, but QE sounds kind of cool still.
But I guess my observation with it, I haven't really been tracking it, but it's below the IPO price or close, so right?
I don't think it's below. It's below the IPO price today.
I see trades below the IPO price. I don't know about the closing price, but I know I saw something 131s and that's below the regular share pool closing IPO price. So
I wonder why people would sell below that price though, because
and the NAV was, even in the ordinary share pool, the NAV was above that price. So if anything, you expect it to go up, right?
Yeah, the NAV.
So I'm not sure what's happening there.
Boy, I mean, I'll call it. I'll say that it's a bunch of people who jumped in looking for IPO pop. They don't see it on day one.
So So panic selling. Opportunity for the rest of us, right?
I love panic selling.
And I tell people all the time, I say, listen, if you're buying an IPO for the sake of trying to flip it, you're playing Russian roulette with that part of your portfolio. And I said to, if I buy a nice house, like I really love the house, why am I just gonna put myself through the hassle to buy it to make 20% on it? I'm paying fees on either side with the realtor. Taxes or whatever.
You made like a tweet about 20-30%. Never meant no say, boy.
People
give me hell for that, boy. Money man say, yo, I can't waste my time for 20 to 30%.
Why? But why would I? Why would I take the risk of hard-earned money that I could use and go for dinner or depending on the amount, you could do anything, right? Buy tires for the car or buy a car or whatever. You take the money in, you buy a stock with it. Great company, and you do your analysis and you realize it's undervalued. Why am I selling it for 20%? So
it's undervalued?
Yeah, I mean,
Well, let me give the people some context. Let me give the people some context. We're recording this the night of Wednesday, October the 2nd, right? So you guys are right, by the way. Well, Ryan was right in that if we go off the original IPO price, 135, it closed today, according to, I'm looking at JTrader here, 134. So 1 cent below IPO price.
What was the lowest price?
What's the lowest price? You mean on the Q?
No, man, the lowest price
traded
at.
Lowest traded value. It traded at a low today of $1.30.
It's like bananas to me. And you know, one thing I said on Twitter about it was that, and Cooper can't remember the original point making before, but one thing I said was why the real driver in QE to me was the person who doesn't have any shares and says, boy, I missed the boat. And I want an opportunity. I want an opportunity to catch the boat. This company has diverse holdings and, you know, reputable fund managers and directors. Why then would one not want to buy and hold? You know what I'm saying?
I get you.
Why would you buy it to flip? Because then if you sell it, technically, what stock you going to buy into? And this is something that's not in the portfolio.
Yes.
You know what I mean?
A hell of a portfolio too, yeah?
There you go. Unless then you're saying, okay, well, I have money to pay on a house and then month becomes due in 3 weeks. And then you're going to IPO and say, all right, just put the deposit in and you're going to pull it out for 20% or whatever. Risky game. But fine, I would understand that. Yeah. But if you don't have any immediate need for the money, it's not for any immediate goal or something to do, selling like that doesn't make sense. So people come to me like that all the time and they say, guys, you know what? I appreciate you wanting to move ahead in life. I'm not the guy to help you there.
You're not helping nobody with a lot of things.
I say, I'm not the person to help you there. And then I use another example of, well, I can't use that example because everybody knows that what you talk about. But let's talk about Lasco when it came out. There's a guy, Lasco came out at $2.50 or the equivalent of 25 cents now. It went to $4 and a guy said, sell everything. And I said, why are you selling? I mean, we're sold. But I wanted to ask him, well, why are you selling? And he said, you know, I've never made money in the stock market before and I want out. This guy's a businessman, whatever. So he would sell their products. I mean, that was 40 cents. No, Lasco is $5, 10 cents. So you'd ask yourself, I mean, all right, fine. He made a couple dollars on it, but then did he really maximize his earnings or did he take into consideration where the company can go?
That's right. That's right. And you're thinking, let me start the foolishness. So that you're sounding very long term, right?
Yeah, I mean, of course. I mean, listen, is anybody really and truly going to consistently take up something they don't want just to say they have it? Suppose you're stuck with it.
Boy.
You know what I mean? I mean, maybe I'm sure some people may do that, but you know, who's gonna take up? Oh, goodness, where am I going with this? Someone's going to take up a girl they don't want in their life for a long period of time just for the sake of?
Just for the sake. Well, you know what people do that. You're right.
I suppose, but is it really the best way to do it? Not to say, you know, I was always above that sort of thing, but I'm just saying, generally speaking, is it a consistent with a healthy lifestyle? Maybe not. It's stressful, right?
No, definitely not.
So why am I going to buy a stock, put my hard-earned money towards a stock, right? That I don't like, but because I think, it has a little upside, then suppose it falls.
That's true.
Or similarly, why am I going to hire somebody I really don't want in my business?
That's
people don't think about the stock market these ways, and they just think it's numbers on a page, and it's, you know, it's a ticker symbol.
It's not abstract. It's abstract.
You know what I mean? It's not in any way connected to real life.
I am agreeing with you there, and I want to say you're right in that. That is part of what I do, it's part of what Danhai did. That we think about the market in terms of real things. We think about our customer, not about our customer, we think about a company going to grow. We think about the actual company, who its actual customers are. People have been to Grove, heard me talk about this. We talk about real life, talk about what is happening to the people. I said one of the rules I said to people at the last grow. Shout out to everybody who was at the last grow. What the last thing I said at the last grow was that one of my rules of analyzing a company, rule, I think number 3, know what its universe is. I define the universe as what it's doing internally, what's happening externally with it, what's happening with its competitors, and what's happening with its region. So, for example, I'll give you a good example. Last year, I remember reading something on the 31st of December, an article, you can look it up, I'll probably put it in the show notes, saying that NHT had realized that they have to think ahead for August 2019 because property insurance rates are going to go up and house insurance rates are going to go up. You know, everybody who have an NHT loan have a
insurance.
insurance, have insurance with it, right? Real life, that says to me, I put together that with the fact that at the time, if you're paying attention to the insurance company's numbers, insurance was taking a kind of a hit. Not many were doing good. Really only GNAC, General Accident, and NCB's, at the time, NCB's insurance company. Those are the two really good ones at the time. And that's from last year, 2018. I looked on it and I know that in August 2019, the rates must go up. Which means that, the rates go up, the revenue go up. Common sense. But if you think of it like a real thing, you're doing good. But if you think of it just numbers on a screen, it wouldn't make sense. None of them, they don't make sense. Yeah, you literally have to think real life with these companies. So I like that you did that.
I have to.
You have to think forward. They can't just... If you're looking at the past reports, the chances are you're missing what's happening in the company. Because if you look at the news, something happening, like today Ryan shared something about something that's related to MPC because of the global renewable energy in the global scale. That's directly applicable to what's happening in MPC. MPC is investing in renewable energy across the globe.
Absolutely. And the funny thing with that is, there's a guy on Twitter who was, I'm not very good. I mean, I use Twitter a lot, but I really don't always remember who said what. But the guy was saying, you can't apply the same theory locally that you do overseas. When I said, but that's nonsensical, because it's the same market, it's the same people, instruments trading, it's people, they have emotions,
they have likes, they have dislikes.
The currencies may be different, but in the day, it's still the exchange of an asset.
There we go, value.
So the same thing you would use to assess an overseas company must be the same measure you use to assess a local one. No, don't get me wrong. Yes, the US market, for instance, may be more liquid, and it may not respond at the same rate, or the Jamaica market may not respond at the same rate as it. But the principles remain the same.
Definitely.
And I try to impress company's a company, and I try to impress on people the need to be thorough or have somebody thorough on them. Because guess what happens? We'll always have a stock that bombs on us. Nobody is going to have 100% winners.
There we go. I mean, I should say, speak for yourself.
I speak for myself. I mean,
no, but you're right. You're right.
You're not going to have everything that grows 300% in a year. It's not going to happen for everything. Right?
No, it cannot. It cannot. It should not.
It can't. And if that, I mean, there was something fundamentally concerning. I won't say wrong if that was the case.
Yeah, it would be a bit of a concern. Because
don't you at least want that the things you win on, you win big because you did the thorough research and you held it for an appropriate period? Like Danhai said, looking forward to where you think this company is going.
In the long term. Perfect.
Well, not even long, but medium. And you see if it gets there, then you get out.
True.
That's our timeline.
Go ahead, Danhai.
That's our timeline, bro.
It's about timeline.
Yeah, literally. Which is my thing. Literally, that's my thing. I'm always into, set up your timeline. I got into some trouble. Because I went on to say the other day that, I got called out, I should say, for saying that I don't know when I became the poster boy for anti-long term, right? Simon, I remember what Simon used to name, Guru in Training on Twitter said that, he's pretty sure that he's seen me do a long thread explaining how much I hate long term, blah, 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 blah. And so I asked him to show me the tweet, and the tweet was me saying, I won't look up the tweet, but the tweet in essence was me saying, long term don't make sense, and long term is an excuse that covers things, and I stand by it because I'm talking about the term long term. What happens is when people don't know their thing. I have gone through a rough couple of weeks. I'm a little more militant now, so I mean, them can't take the money from me. So I just talk straight. I know what I'm talking about, and I have sense, and there's no need to doubt it. People who know what they're talking about, like Ryan and I invest differently in some things. It's funny because I believe in long term when it makes sense, and I believe in short term if the gain is there. And I think Ryan Moore is more medium long, and then he'll see short term if the gain is there. So a little bit of the vice versa, right? Definitely. But my thing is not to tell anybody long or short term, because when we talk and we don't know, we say long term, short term, and the three of us say long term, and it means three different things.
Exactly.
Yeah.
And I think something that people missed out on, if I remember that thread correctly, is where you said many times advisors make bad picks, or people make bad picks, and then they say the excuse is, but I'm holding for the long term. But it's still a bad pick.
Exactly.
And in the interim, when this pick is suffering, you had other stocks that did 150%, and maybe that pick that was depressed for a while would be appealing in light of this new normal when somebody made all that money. That's kind of like Berger for a while. And when Berger was $3 or $2 for for maybe 5-6 years now.
Yeah, it stayed between
For a
3 and
while.
5 for a while.
So when I got in, coincidentally, it just so happened that oil prices were low, so their overheads fell to the floor.
Yes.
So they made, I think, 300 million plus that year. That's when it went from 3 to 20.
To 20, that's right. In
or
fact,
24.
And they had an MD who reorganized.
Exactly.
Shout out to my brother Nigel. In the tweet no more about him lurk. Nigel who spotted same time that they reorganized their inventory management to sell off all of the old inventory and run to almost a just-in-time system. Boring stuff if you don't know logistics, but essentially it means that them get rid of all of the old stock, got the cash for it, and started to run the business in such a way that things are on hand quickly. We don't need to pack it up too much if we don't need it. No, don't quote me if I have that wrong. Blame Niger. I mean, if I'm wrong, I'm wrong there. But the idea is that the MD switched operations around in such a way that they were able to be a lot more efficient, and they made a hell of a profit. And they moved from what's bird right now?
$3. I mean, now it's $19.20.
Yeah.
So I mean,
from $3.
From $3.
From $3.
I'm out no, but the point is,
What was the time period?
It languished. I had it for 3.5 years.
3.5 years.
3.5
So
years.
I mean, that's not bad. People
And still, I mean, there's still a dividend paid that worked out to be about, it was 50 cents, I think, on an average price of 5, like more than 10%. More than 10%. In fact, I think they had a special dividend that was above that. So I have no issues with it.
Really?
Yeah,
you got a special dividend above 10%?
They had a good payout.
That's a nice dividend.
That's a good solid.
Wow.
In fact, I tell you a story that one of the leading shareholders' average price is $1.80.
Whoa.
And they own more than 5% of the company.
Whoa.
So when they pay 50 cents in dividends, now that person's yield is about 25% plus on top of capital gains of 1,000%. That was a distressed buy. So I said to people that, and that's what I took from your thread in terms of the excuses. I'm going to hold it for the long term. Sometimes it's okay to say, listen, I just made a bad pick.
Exactly. Exactly.
Like, what's the big deal in that?
I find out we're missing out of that in the industry. Me already talked about it a lot. We want analysts to go out there and say, yo, this is my outlook on the stock in X time. When time come and this is the results X time come, results come out. Was I wrong? Or was I right? And he'll go forward. He can at the end of that say, boy, I was wrong. My view is changed. There's nothing wrong with changing your views after you receive new information.
Correct.
I don't understand what's happening, but everybody's fighting and say, boy, I'm right all the time. So it's a 3-month play, and then you look at it, boy, I'm wrong, long term. This could happen in the long term.
I was going to hold it for 10 years because.
Yeah, just because. Yo, we're going to tell the problem with the man right now, right? And the women, because there's some women in the industry. Big up the women in the industries.
Always.
Here's the issue I have, right? Everybody wants to get the praise for having improved.
Yeah.
But nobody wants to admit that they've improved from something.
Yeah, man.
Absolutely.
Yeah, it don't make sense. I found the tweet. The tweet I said was, I'll quote it verbatim. Long term, in air quotes, is foolishness. That has been used by, long term is foolishness that has been used by the industry to cover poor analysis and picks. I don't buy long term. I buy with set dates and goals in mind. 99% of the time, long term is just a cover for this was a bad buy at a bad time, but it will probably get better in years.
That sounds like what I said, right?
Literally exactly what you said.
Exactly
It makes sense, but I guess if you need it to match a narrative, you have to say something else.
Sure.
Yeah, at this point, I literally have to have a little come to heart with myself. I have a couple of friends who say, yo, hold on. You're arguing. I feel weird. I made money, more money than I ever thought I could make in ways that is me testing my own theories. And they're working. And I hear worrying about whether or not people are saying I'm right or I'm wrong, when I know for a fact that I'm right. And I'm not doing anything magical. No, Ryan and I differ in that I do touch shorter term things, but I don't aim for short term either. I'll say it to anybody who's been to Grow has heard me say it. You guys want to learn about this stuff, you can come to Grow. But www.everymickle.com, let me put my ad in. www.everymickle.com. This podcast is from everymickle.com. That's my website. You want to learn about investing, you want to learn my personal methods and the basics of the industry, you'll hear it. For the people who have been to Grow and have been pesting me all the time, not pesting me, but being in my neck, which is what I like. Social pressure. For me to have an advanced class is coming. It's coming very soon. Hopefully in a week or two, you should have an email. And it goes specifically to those people. I don't want to drown people out with their emails. But yeah, an advanced class to hear more of my method. But I was talking about my method because my method is this, right? I use event-based things. You see that thing I told you about the insurance coming in August? If I don't have no money, I have 100 grand. And last year, December, my 100 grand was in NCB. And I'm not taking it out of NCB, right? It have to be really good for me to take out of NCB. I'm okay waiting until July this year to then put it into an insurance company and I pick which one is the best. Now, I'm telling people to move from NCB to an insurance company now. But in this hypothetical situation, I would move it there in anticipation of August rates going up. Matter of fact, if I'm very smart, I would know this. If the rates go up in August, I have to check to see when August is for these guys' quarters, right?
Yes,
then we're going a little deeper. So now we're looking at August is the time when the rates can go up. But let's say August is a start of somebody's quarter. Then I don't worry. I wait because I don't buy necessarily in August either. I watch it every day though. I don't buy in September. In October I buy. When I get a little, so August, September, in October I'd buy, right? I put some money in and I wait. Why? Because I know if I'm really desperate or if I'm really trying to ride it long enough, I don't put in October either because I know the rules say that they have 30 days for the end of the quarter to report.
Yes.
So that means that end of the quarter, end of October, we're looking at maybe the end of November 30th. So maybe November 20th I buy in.
Or maybe I think it's 45 days. 45 days.
Yes.
Like mid, you'd have like till mid-December.
Mid-December. Well, that's if it's a year end.
No, man.
No, year end is 60 days. 60 days if they've chosen. Yeah.
It's 45.
Yeah. But that's the sort of thing that I'm thinking right now. If I had bought in, let's say I bought in the 30 and I'll give the extra 15 days and then they come out 15 days later and boy, it's good. And of course, as we find in Jamaica, stocks don't move when the news come out either. Stocks move a week later when Glean or Observer or Loop put out the article and then somebody say it on Twitter and it get passed around and them ask them. So I know that I have the amount of time. Now you'd see me buy it end of October and you'd see it rise early December. And I say it rise 20%. And I say, yeah, bought this end of October. It rise and I say, oh, this short term. So we're not short term. I literally saw it last year, October. Exactly. Now if I have more money and I don't have the time to waste, I'd buy it last year, December and put it on a wait, right? So I have been working very hard at a poor man level with shorter money. That's just the truth. That's the thing. I post the thing all the time. If you have less money, you have to work harder.
You do?
Yeah, it's just a simple thing. My brother Ryan, I've always known, has had a good luck of working with bigger money people. So he's had to. He couldn't be telling this. I wouldn't. Let's say I don't call nobody name. I don't get nobody in trouble. Sure. So let's say, I'll call one name. This guy that owns a company with me. I don't know if you know him, Michael Leachin.
Oh, yeah. Heard about him.
Yeah. We own a couple of companies together. You know?
Yeah, heard about him. Once or twice.
Good guy. He's been doing a good job. But if I talk to Leachin, I'm not going to tell Leachin in December last year to wait until October next year to put the money in. No, especially at the level of money that he has. Big money cannot move quickly in Jamaica on the local stock market because the volume's not there. Some companies, you just have to be very careful. If you're going back to QWI.ja, if you look at how many stocks that company holds, you realize that a lot of them are junior market stocks. But the reality is, you have to hold that many stocks because not just for diversification, but you just literally can't put that much money into any company.
It's tough.
Yeah, you raise over $1 billion and their companies on the market not worth that yet.
Yeah,
so when buy stocks,
can only go so much.
And when him selling that, he have to find somebody to sell it to. He can't just sell it on the open market. Yeah, we see the same thing with Access. Although that I don't jump to Access yet. You guys want to touch that? Anyway, let me wrap this point.
It's
a long tangent. Let me wrap this point. My point here is that people need to be sure of what their goal is ahead of time. They need to work towards the goal and be honest with themselves to what their goal is. Because a lot of time what you find is that they say one thing but they do another.
Sure. Absolutely.
None of that. Pay attention to what you're actually doing and buy towards that. And let me see you do and stop ridiculing other people, ask them about the results. I notice the one thing everybody shy away from when we're talking about is results. Why do they shy away from results?
I'm not even sure.
I don't know. You know, you made a good point. And you know, I'm not the kind of individual to get in my feelings over the truth, right? So you said something, and I thought it was a very good point. You said that if an advisor can't give you stories of their personal successes in the market,
there we go.
They have not justified their standing as an advisor.
That's right.
I think that is a true metric to hold persons to.
But the joke is, he just cut the number of advisors he actually got on to a very low number. Because the actual amount of advisors that are investing and slim and the ones that are making money,
even slimmer. But a lot of them still waiting on the long term to reach.
Oh, yeah. You know what I mean?
Yeah, man. I've said to Ryan privately years ago, I don't know if Ryan remember. I said to you, yo, the way I see this industry, this long before I was writing every mickle. I've been here for years, but I never say. I said to Ryan, yo, the way I see it, Ryan, it's you, me, John Jackson, Chris Berry, and maybe 2 or 3 other guys. I know John Jackson have a couple of people behind him who do some really deadly stuff. I know Chris Berry and what's his boss name, Danhai? Don't lose his work, you know.
Gary Peart.
Gary Peart. I know Gary Peart also makes some deadly moves in the market.
Donovan Lewis, man. I'd say he's probably top of the list.
Donovan Lewis is OG. OG. People, you're not going to see that in the show notes. Look it up. I'm not going to put that in the show notes. So that's an OG.
Enough respect every time.
Yeah. So for when I said that years ago, thinking, yo, there are not really that many people I see really moving. Now that I'm actually doing a lot more with the market, now that I'm paying attention to the heavy volumes, you really realize there's not that many people because we see each other in the market. You know? Yeah, that I know. We make plays sometime and, 200,000 units of X is out there, you know, and I go for it. But guess what? I want to catch 50, so it's gone. Somebody else move and grab it. Yeah, and it's not a random somebody because after a while the same thing keep happening. Oh yeah, and two you see a name pop up in a top 10.
One morning, just other day, I showed Randy the queue of a certain company. Yeah, and Randy said, "Oh, that's me." I was like, "Oh, I was gonna put that same order in."
literally. Yeah, but sometimes he send me a thing and say, "Yo, like this can move," you know, and I say, yeah, no, I just ordered. And next time, like I'm talking to friends, you have a couple of friends who talked about stocks and them saying, boy, them think this look good, you know, and I'm gonna buy it tomorrow. And I say, yo, just put in a big order because you're not going to get that. Yeah. Because I know I'm grabbing everything. Right everything there. Yeah. And I said that where they about PULS. We kind of segue into PULS because that's hot right now. Yeah. I said that where they about PULS and I had to take back my thought because somebody else grabbed it before I grabbed it. And I put in the order from almost 4 a.m. But yes, somebody just went and grabbed everything at a certain price, everything below a certain price. I had to just hold my con and go above.
Wait it out.
Yeah, that's just how it goes. So I know the market isn't really heavy enough for a lot of people. But the people who are serious about it, the people in the industry who are serious about it, they're making money and they're seeing it. And the guys who are advisors, I still to this day I don't have nobody to send anybody to. I can't send the people them to Ryan. People don't have 100 grand, no insult to anybody. I mean, I started with 10 grand, no this to anybody. But Ryan don't have the time for 100,000 Jamaican.
Yeah, I mean, I'm not going, whosoever will, but, it's just not time sensitive all the time. But
yeah, and people want to feel like everybody want to feel number one. And they should when they feel number one and deal with them broker. The broker complaints I get, I can't even say nothing. I feel shame on behalf of some of the brokers.
Yeah, I mean, I think do I really want to go into this? I think the real challenge I have is when people start complaining, because it says to me that it's something that should be addressed. Now, remember, I'm in the industry, so I'm still one of many advisors, and I think rather than one getting their feelings about it, we all should take it as an opportunity to improve. And do better and better serve people.
There we go.
That's the ultimate outcome, I think, rather than talking down about people and all that. Because in the end, that doesn't help anybody.
It doesn't help anybody, right?
Doesn't help anybody.
If I'm talking about people, me wasting my own time. Yeah, I could be constructive doing something, making more money.
Exactly. So, and this what we have with the local market is a real opportunity for small money to become medium and to eventually become large money. It's the ultimate, to me, value creator in Jamaica right now.
I'm sure we've all seen it for ourselves.
All seen it for ourselves. Boy, I can tell you.
Small money.
As I said on Twitter, when I was buying Burge at 3, it was 10 grand. So I said to people, I mean, it wasn't always with 10 grand, but I said for every $10,000, it was 60. You do that 5 times, you go from $50,000 to $300,000. Without doing anything.
Yep.
You know what I mean? Just be the same. They've got the same temperament it takes to look on money in your bank account and not touch it, because you really could take it. I mean, technically, depending on what you do. If you're inclined to go out and drink, you could go out and buy a Hennessy, buy the bottle for a long time.
Because 16 grand at 16 grand a bottle at Ribbies. Matter of fact, let me pause or point to interrupt Ryan. So one, big up to Brando Attacks, our guest last week, who sent some shots your way.
I'll never hit his bar, but I'll do my best to do my thing and I coexist.
one in the Valika celebration, one evening at Ribbies, and I don't know. I remember ordering one bottle of Hennessy. That's it. That's the only last things I remember. Never again.
Was that celebration recently?
No, he hasn't been selected. Oh, you like to fire shots though. Oh, wow. Wow. Okay.
Just asking. I don't know.
Okay, no, it wasn't a recent celebration. It was maybe a year or so ago.
Okay.
It was in the fun days of SSLBC.
Same.
Who just released their numbers today? Have you looked at them?
Yeah, I did, but I didn't really look very closely. My one thought was the admin expenses number was high. I don't know, 145 million and 320 something million revenue struck me as high. I don't know. I don't really understand that, but again, it's not something I pay too close attention to. You know?
They have a new head of everything now, I believe.
Yeah, Zachary Harding.
So
I think he's CEO for the group. You know, shout outs to Zachary, all the best.
Yeah, man. In fact, I did some praise on Twitter. Let me do it here also to say big up to him because, I mean, as new CEO, I've seen numbers now come up. First of all, the auditor didn't resign, so that's an improvement right there.
Yeah, that's good.
And then the numbers themselves, the auditor put the name behind the numbers, so I have a respect for that now. And I'm going to swear to the numbers because I only did a light look myself.
Yeah.
I looked for that little line in the audit report to say, we believe this to be a true and fair representation of...
true and fair,
So I'm happy that I saw that.
Yeah.
But I did qualify it though, but if you look on his initial, this Zachary's initial, I may not have been his initial press release, but it definitely had bore quotes from him where he said that the audit was ready, it would be filed, and it would have been qualified, and it would have shown a loss, and all of that was consistent. So I think it was good that he said it ahead of time.
Yeah.
Because there really were no secrets. But I think what would be interesting to see for all of us as analysts is what follows. What comes next.
Yeah, what comes next. Yeah,
I noticed what steps are taken. Because there was another resignation of a director that was announced today. I believe so, and there was one last week. I'll tell you the name in a second. I have it in my...
Wow, so the one last week I know was they used a weird name. It was
Richard Forbes. Yes, it's really Delano Forbes, but Richard Forbes and from the news board. But then you have Cecilia Watson. Yeah, she resigned. So you see where, you know what was said last time. We said sometimes you may sit and advise a boy, you know, somebody left. You know, you heard about the resignation, they'd be like, what are you talking about? It helps to be on top of things. So.
Yeah, and people give me a hard time about it because you know what happened now? It's like I'm almost the dear pastor of the stock exchange.
You are popular, I'll give you that.
Yeah, unfortunately, right? It's not that. But I understand why people do it, and I'm glad that people now feel okay sharing these stories with me. What I want them to do is to come out and share it their own, because I say for years I was the only person balling about it. The point that we're in now, I can't be the cantankerous one always balling. You get me? I need more people to say, if you have a bad experience with the broker, state exactly what them tell you, put it out there. You can add med N if you want. You can even add the I don't know if they can add the finance to people, because a lot of them, some of them might work for some of those houses, some of them might not want to step on any toes, blah blah. You can add me. You can. I'll say it if it's wrong, but the worst thing you can do is keep it secret. When you keep it secret, nobody gets help.
Yeah, there you go.
Yeah, and the person that comes behind you gets the same crap happen to them. I mean, I see things. Somebody sent me something today saying that they asked for a statement from the broker, and the purchase price on their QA shares were wrong. And so when they asked, I won't say the person's name, but when they asked about, you know, why was the price off, they literally cut and paste the response and show me. The person is saying, yeah, I really can't tell you why. Right off the bat right there, I broke up. My rep can't sit in front of me and tell me that. I don't want to shame the company here. Yeah. Also, because, you know, we might need some ads. Mail at everymail.com if you want to put an ad. It probably won't put ads, but it's fine. But I don't want to shame the brokers. But you don't tell that to a client. You don't tell a client, I don't know. For something that you have their money, you're mad?
Right.
You can't tell them that, man. Yeah, you have to find the answers immediately. And then the actual response that they gave was weird. I don't want to dictate, but it's essentially you're saying to me that I don't know something, I come to you as an expert, and you want to tell me you don't know either. So and then the second thing was that, that wasn't our IPO. We didn't do that one. This isn't IPO processing. This is now me looking at my account. So I went by myself.
Yeah.
To the broker, the listing broker, bought the shares, got into the thing. I am now seeing in my account, but the price is off. And I'm asking you how it going. You're going to tell me, I don't know, that wasn't our IPO.
That's when a lot of the broker doesn't understand the process.
Man.
Like he just don't know what's going on.
It's sad. But what I'm doing these days is I'm making sure that when I talk, I come prepared and I put out one point, because I'm not going to start a whole heap of problems.
Yeah.
Put out one point, And the point stands because there's a proof, and you either like it, dislike it, deal with it, or don't. But I'm not putting up the noise.
The facts is the facts,
yeah, man.
right?
Exactly.
Yeah,
literally that.
I don't really see an issue.
For QWI, I really cannot explain the price you paid. QWI was not done through us, and possibly my system is not distinguishing between the different costs, but possibly just use the listing price. Can you imagine asking about millions, because this person's asking about a bit of money? Wow. Yeah, that's rubbish. And then for BIL, the system will not adjust to the rights issue price. Also, please remember that our average price will also include fees. The system will always try to average cost prices paid, especially when there's more than one purchase at different prices. Rubbish. Because I know the system the person talking about. Rubbish.
Oh, man.
But yeah, you can't. I'm not going to stop balling until the standard is raised. And you know why? When the standard is raised, everybody going to say, oh, look how good we are. Yep. Yeah, I going to need you to say that as validations that when we were here it was bad. Man. Yeah.
And I think the activist investor or the involved investor community is very necessary. You have it, I mean, people may say they're pricks or this or that, but they're in America, right?
Yeah.
They're doing hostile takeovers.
That's right.
They are involved. You have the Carl Icahns and all these other guys.
That's right.
They are involved and they are disrupting companies, and that is why you are public.
Yeah.
You're not public to act like you're private.
Exactly. That's a big problem I have. You sell me a piece of this company, but it's not my company. That's crazy to me.
That's crazy. You don't have that luxury anymore. If you're public, you're public.
You're public, yeah.
People are gonna look in. People are gonna ask difficult questions. People are gonna scrutinize, and justifiably so.
Definitely.
So the call should be for all of us in the industry, because as I said, I'm in the industry, for all of us to improve and step our game up. And to take the feedback on the chin and to not get in our feelings about it. Because I hear stuff and then I'll be like, is it the big boss who said it? No, there's an underling and not even worth the time. Let's move on.
Shout out to one of the OG minority shareholder activists. Same name, Ryan, because I know you've had to deal with him before. No, man. There used to be Mr. I don't want to get the name wrong.
Chen.
Ralph Chen, who isn't with us anymore, but now the person who's still with us.
All right, Stapler.
Yes, Mr. Staple himself. Shout out to Mr. Staple. Yeah, love him or hate him, he's there doing what more people need to do.
Going to AGMs and asking questions.
On that note, let me big up Boogie, who I saw went to her first AGM. She said she went to JSE AGM.
Shout out to Boogie.
Yeah,
troublemaker.
Real troublemaker.
Yeah, all the time.
Real troublemaker. I rate you, Boogie. I know you're typing this right now, saying at RTRO is saying I'm a troublemaker. I'm sure you're adding something else to it to make it sound different. Big up, Boogie. I'm happy for you, though, but boy, you get trouble.
Absolutely.
You get trouble, yeah, man. But it's so it go.
No doubt.
Yeah, without personality, we'd all be boring.
There you go.
Yeah, man. So big up, but and I big up her challenge. So she said she's doing an AGM challenge. So I said, let me take it up. I'm going to go to an AGM and speak publicly about what's happening there. And get people involved in the process, because you know you've been to these AGMs, right? You see, spare old people.
Absolutely.
It's like young people don't care. Guys, if you care about companies, you care about investing, find the time and go to an. Yeah, man. I know people say, yo, they happen during the day. Don't let that deter you. Plan ahead
and go.
I'm not telling anybody if you can't do it, you can't do it. I don't want to sound too privileged. I don't want to sound too privileged. But if you can plan ahead and go to an AGM and go to the one company. Those people who only have a small money in a one company, look and see when the AGM is. They have to tell you way in advance. So go book your day, tell your boss you have a meeting, you have an appointment or something on the road, and go. And it feel good, because guess what I learned from working in a public company and working for other companies too. One, the half day you took probably would make that bigger difference. But two, when those people have things to do, and sometimes AGMs, they make the time for it. If it's important for you, make the time for it. Do it.
Absolutely.
If you can do it, do it. If you can't do it, I understand, but do it, please.
You might go there and see
you might go there and see your boss, and if there may be a live stream, like NCB, I think has a live stream.
Yes.
So you can even have it in your headphones while you're doing your work. Well, take it seriously enough to go. Because many times you go to these AGMs and you hear the gems that may not be covered in the newspaper, that you have the edge, that gives you an edge over the average investor. And that's not insider trading. You just went to a public meeting for shareholders.
You went to the right meeting too, where information was given, and sometimes things are said way in advance.
There you go.
That Blue Power lumber split off was mentioned at the AGM, I think before. In fact, the person who writes it in the newspaper is usually at the AGM with you hearing it, and they have to go home, type it up, write it up, and if it's like a Wednesday, it probably not gonna come out until Friday or Sunday.
Right.
So you have days ahead of everybody else.
It's Thursday and Friday.
Thursday and Friday to get in, yeah.
Yep.
To get in way ahead of everybody. So don't take this thing lightly. Please pay attention to the market, and the market require active investors, activist investors, people like me who are 9 who them don't like, but you have to get it right.
Do it anyway.
Yeah, do it. You have to get it right. And it also requires shareholders who care about the companies. Yeah, man. Ask their 9 questions.
Absolutely. Which is, and what, and I love this kind of thing. So when you had the activity with Mayberry Access, I loved seeing that, because you know what it said to me? The market's vibrant.
Wait, which Mayberry Access?
Mayberry and Access, when you had
back
the
in the
disturbance.
Day.
Yeah, man.
Yes.
5 years ago, you had disturbance.
10 years ago.
No, it's 5 years ago.
5 years
2014, yeah, man. 2014, when you had the
2014?
Yeah, prove on it.
Well, you can't do anything before 2015, Ryan. But yeah, 2014, I remember. In fact, there was
there's big newspaper coverage at AGM. They wouldn't let you in if you weren't actually a shareholder
at the time. Yeah, which I don't know how legal that is.
I think they may have a right to do that.
I don't
know.
Yeah. I think it's only shareholders that are invited.
Yeah.
So only shareholders have a right.
That's why they make you sign the register.
Yeah.
But if I'm a member of the public and I'm considering buying into this company, you don't have a right to go in. You have a right to be there. Okay, understood.
Well, that's my understanding, but I know for sure that's why they have the list, because I think there has to be a set number of shareholders in attendance, but I could be wrong. Don't quote me.
Yeah.
But anyway, so seeing that, and then what was other major issue these recently? You had SVL, Mayberry again, and you had several things that said to me the market's more vibrant. You have shareholders and investors who are involved, right? And I think that's a sign of a market that's alive versus others that are more or less dormant, that have nothing going on, that you probably have one trade out a day for one company. Yeah. Can you imagine that in Jamaica?
Shout out to the Barbados.
You have one trade per day. You have one exchange. I think it's Eastern Caribbean that has maybe 10 securities listed. Could be a little more, fine, but 10.
10, yeah, and they don't trade that much. Not much happens.
Come on,
you might see me buying bonds in those markets.
Oh God, you touch bonds. How you feel about bonds, Ryan?
Depends on the bond. I mean, my stance has been for a while. I mean, going back 5 years. No, 5 years. Whenever Venezuela started to have their major issues
with the BSA.
So what I started to do was, I said, listen, if I'm buying a bond, I'm being cautious. So I'm buying Apple, I'm buying Visa. I'm getting 2-3%. But then I'm buying stock aggressively. So I'm trying to get an average return, but I'm not buying if it's overseas, I wouldn't be buying necessarily a lot of finance companies, because I thought they had risk at the time. But I've been buying the Googles and the Facebook, the companies you couldn't go around. And I said, you know what? I'm trying to get 10% a year. Okay, if I split the portfolio in half, I get 2 on a bond, for argument's sake. So therefore, I need an average of 8 on the stock side. But remember, it's 8 and 50%, so it's 16% I need US dollar terms. So if you do that, you get 10% per annum, or close to, or a bit 9. So you probably need 20.
You heard the expert talking?
So you need 20. You need 20, right?
Yeah.
So then at least that way I balance the risk, because nothing's worse than you go buy all these bonds trying to make 6%, but the risk is so high and then a default like Barbados.
Oh wow! Well, hold on, that can't be, because I was reading online. You're wrong. Because I was reading online recently.
Says that bonds are low,
and that bonds are low risk, right?
And this is why I said people need to have a discerning mind, inquiring mind, because you'll hear this popular narrative. And I said to people all the time, listen, Lehman Brothers was an investment grade AA rated institution.
Yep.
But it disappeared. And I mean, as I said in the papers, you saw the papers, it hit NCB Capital Markets and JMB. They got licks because of it.
Let's not talk about mortgage-backed securities with those bonds.
Whoa.
So
those triple A's
investment grade. So it's justifiable as an investment, but at the same time, are we just going to take it at surface, or are we going to try and examine the underlying factors? So my thing on bonds is, I do not believe at this particular juncture that any bond should be bought. I would buy government of Jamaica, because I believe that, one, the government can repay its debt and has been doing so. Right? So then if I'm buying any bond, no, I'm buying a country. I'm not, if it's global. I mean, global meaning foreign, like outside Jamaica. If it's local, I take my chances, because some of the bigger companies can service the debt. And you'll have more demand for them coming up. But just getting up now and saying I'm going to buy a bond portfolio,
Just for bonds.
Just for bonds.
No, I'm not bonding myself.
All bonds are not equal.
No, not at all. Not at all. And people get misled and clients have lost money.
Definitely.
Significant.
Last story I'll tell you. When you're done
okay.
when you're done, I'll go on to
Yeah, I mentioned more than once on Twitter that there's an investment house that considers bonds to be a high risk investment. You need to say that they have a high risk appetite to go into even invest in bonds. And that house is well informed about investors that have lost money. Just like, I'm buying bonds because it's secure. I'm buying a low risk investment. All people lose money on bonds all the time.
Yeah. I'll give you a classic example in the Caribbean. Two brokerage houses ago, there was, I remember the situation. Somebody had Petrotrin at 140.
Ooh.
Right? Trinidad, that's the equivalent of Petrojam in Trinidad.
Yeah.
140. A-rated security.
Mm-hmm.
So, bonds redeem at 100. So I said to the individual, relatively new relationship, I said, hear me now, get out.
Yeah.
Because you're up 40%. It matures 6 years from now, fine.
How are they up 40%?
Because remember the bond is issued at 100, which is par, and it pays back at 100. But throughout the life of it can go up and down.
So they got it at a good rate.
Yeah, they had like 120 something or whatever. So even then there was downside risk on it. So maybe they weren't up 40% in that case, right? So I'll correct myself. It was 20% plus. But they were getting 9% a year in interest.
Yeah,
so
that's not bad.
Steady, right?
Yes, that's good. Right.
On the US. When I saw that now, I said, okay, so right away, if it redeems at 100, you lose 20 because you bought at a premium.
Mm-hmm.
But what is oil looking like going forward? And do you want to hinge your wagon or hedge your bet on stability in the oil business?
What year was this?
This is like 2012. This is before.
2012.
So our prices were high.
This is when oil was over $100 a barrel.
Right?
Yeah, man.
So I said, listen, cut it. It was sold. We had Petrobras. 2014, I'm in my yard. I'm like, I was a couple months to get to married. I remember I was up late and like I was watching Bloomberg in the morning, right forward into my bed, which is a habit I developed because 2 o'clock I was in my bed. And one man said to me, cut Petrobras.
For people who don't know, Petrobras is the petroleum company in Brazil. Yeah.
Right? They had this, again, investment grade rating.
Top.
Petrobras, within 6 months of that, fell from about 99 to, let's just say 75. Because that's when Brazil's economy started to get into some challenges.
Yes. Lula was out and Lula was the president then. But
here's a joke now. What you had were people, it's not like stock investors who want to put in fragments. Unless they deal with, me and they really, I said, listen, we'll show the rationale. You had people who would be putting the equivalent of a house in a bond. One bond.
Oh, yeah, man.
So you can imagine if,
because low risk, that's why.
Low risk.
Safe.
Some would sell a house and be like, yo, I need 2 bonds.
Word.
Yeah, man. Those are the clients institutions love.
Yeah, man.
Yeah, because you're giving me double-digit millions and you're leaving it for 10 years.
And then time now, interest rates were going down, I think, in light of the financial crisis. So bond prices were going through the roof. Right? So anyway, Petrotrin, as I said, 2012 was sold at 140 something, right? Or 2013. The other day, Petrotrin was at 90 something, like 96, 95. And remember, if you remember correctly, there was thought that the Trinidad recession government economy was in a recession.
Yes.
And there were challenges with repaying the debt and all of that.
Yes.
Now, can you imagine somebody holding that bond in light of that? There's another big investor, obviously can't name, who sold millions of US dollars of that bond on my advice.
Okay.
What this is
millions of US dollars.
Millions of US dollars. And they know
like 4 people at it.
Well, so what I'm getting at is that, again, that person was spared the headache of a liquidity challenge just because one silly person said, you know what, consider the wisdom of exposing yourself to this particular bond in light of the economic climate, and let's just forget about theory for a second. Let's look at hard numbers. I don't even know if that bond's been redeemed, but it could have been, but to my mind it hasn't. And there's been severe challenges. It may be refinanced, maybe swapped.
Yeah, so that's it. But for the people who don't know what's going on there, I'll simplify it for you. When you hear that stuff going on for a stock, for a bond, that's when you should worry. The equivalent of hearing whether or not is literally the man them saying, "Yo, we might not pay it back." No, you hear that doesn't happen. It happens all the time.
With the common story right now, an issue. I see a lot of people lose money on this callable bonds. So the callable bond is where the company that issues the bond can call back the money. They can say, "Hey, I want money right now," and they get it at they take back their money. Well, they take back their bonds and give you back your money.
Okay.
But the money they give you back is at par, so it's $100.
Is that whatever it's at market rate at the time?
No, man. So the market rate can be above par. So par is generally 100.
Wow.
Yeah. So you bought the bond at 130.
Yeah.
And they give you
par value.
100. They give you par value at 100.
Yeah, and if
so you just lost that 30. You lost 30 spread.
One time, and you cancel them because it's the terms of the bond.
And what happened with the callable bonds recently? Out of interest rates are going down. So the issue was, hey, I need some high interest rates. So I see some 7%, some 8%. I buy the callable bonds at 8% because the 8% interest rate, I say, is higher than everybody else, and they're 5 and 4% right now. And because of that, the prices were going up. So every bond with a high interest rate, the prices were going up. And a lot of them got called.
Absolutely.
Because, hey, I need to refinance because I'm not going to pay 8% a year. I'm going to pay 5% a year.
Exactly.
Why
would I do?
Reissue.
Exactly.
A lot of people lost money on that.
I'm going to tell you a next thing that to wrap this bond thing in case people, I don't want to bore them too much on it, but I'll tell you a next thing about this bonds thing, right? There's also the I call it the practical lie that if you own a bond, you're ahead of shareholders in the event of a default. No, it sounds good in theory, it sounds good in the textbooks. It is true in law. But the reality of business is that enough bondholders get put out and leave out in the dry. Because when the company wrapping, very few companies die overnight. All right? Very few companies die overnight. Companies die with signs, just like people that show signs of it, they start weakening. The guys who own those companies tend to also own a little bit of the debt, depending on the kind of company, whatever. You see when that company is sinking, you think that man is going to make the bondholder eating money before his equity? No, man. The expenses start to go up. Yeah.
That'd be an expense.
I give you a joke.
And so, sorry, we're not to cut it, but the real thing that happens at the end, though, is that at the end of the day, I only care about my specific money coming into my pocket. And so it doesn't matter if you call it a bond return or an equity payment or whatever. I know I put $1 million out, and I need, if this company is going down, I need at least $1 million back. And I will do whatever it takes to get me my money. I don't care if I'm not in the bonds. I don't care if I'm doing whatever it takes to get my money. The guys who own the companies tend to do this. If you look at how a lot of these companies have wrapped up over the years, you realize that bondholders, yes, are officially at the front of the line, but there is often an unofficial line that bleeds money out long before. And let me tell you something. Me personally, in a crash situation, I would personally, and I'm going to get a lot of flame for this, I personally would rather own 60% of a company when it crashes than 60% of its debt. Unless the debt is convertible and it can take over the company with it, blah, 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 right?
Yep.
Otherwise, yeah, I'm going equity all the time. At the end of the day, leeching has more say than the people who owe NCB money. In my view. So if anybody who owes an NCB bond, NCB not going anywhere for any time, right? But in the event that you were to fail, I would rather be on leeching side, which I am, big up, than to be on the side of a bondholder, because it's a difference between being in the house and coming to the house every day and asking for the money I owe you. Yeah, man, I'm gonna pay you. Yeah, man, we have this thing working out, but I'm still in the house. Yeah, that's just a simple thing. Is it right in theory? Yes. In reality, follow what the money people, and the money people don't necessarily kill off themselves over the bonds. The smart money people, the shrewd money people don't.
Yeah, fair. And I mean, sometimes there's robust negotiations as far as, they can be here. In fact, I mean, there's a classic story locally about that. There was, I think Walkerswood had an issue 10 plus years ago. They had that's when I think Panjam and a consortium, went in, of which Panjam was one, and an establishment aligned to Ray Chang, rest in peace, and others went in and rescue operation. I think Walkers may have had bonds outstanding, whatever. Shareholder, and I think I don't know the specifics of what happened. The rescue effort was very successful. Walkers is obviously on very strong financial footing. But as a result of their being ahead of particular hurdles, there were sizable payouts made. So
to the people
who remained, and stayed the course with the challenges. So the point I'm making is not as though, as Randy Wright said, a company is not necessarily just going to wind up itself overnight unless it's absolutely critical. And you may have a situation where bondholders are not paid for a while because all the resources of the company are being put towards keeping the company afloat. So you have to remember, yes, you may get your money back. You may be a bit delayed to get your money back. But if you borrowed to lend, I hope you have other means to service your loan.
Exactly. So you might be left holding the bag.
You be left holding up, or you have to sell something to service your loan, because you can't exactly go into the factory, seize a machine, and sell it.
Yeah.
So with lending somebody money or a company money, you are taking on a risk similar to that of a shareholder. So because you are assuming that company is going to remain viable. So I agree with you. Why not buy the stock then?
Yeah, man. It is the difference between knowing the risk from a book and knowing the risk from real life.
Absolutely.
Yeah, when you know business, you know what, if I buy, I'm going to use NCB again because I own that company. If you buy NCB's shares, you are taking on the risk of being an NCB owner. If you buy NCB's bond, you are taking on the risk of being an NCB owner without the benefit of actually being an NCB owner.
Which is why I said the 20 to 30% thing is not, it doesn't make sense to me, because I'm taking on ownership risk anyway. I'm not taking it on to just make $2 from 10. I'm taking it on to make 200 from 10.
Yeah, man.
Because I'm not there every day,
That's right.
I want 200 from 10. I don't want 2 from 10, because then when I have 12, what am I going to do?
You're going to learn again.
I learn again. Why am I doing that?
And you know, a lot of people do the bonds to that. When the bond wrap up, there's always something new to grab your money again.
Definitely.
So they're not liquid.
Yeah,
because you can sell a piece of it, I'm sure, but it's not necessarily going to happen, right? All the time.
Exactly. That's exactly true.
And then the other thing is, if you're talking like the global bonds, you really are not supposed to sell them in blocks less than 100,000. Yes, US in some cases you can, but one is not expected to. And there are some specific bonds, and I think some like the country ones, you have to buy in blocks of 100,000 or 200,000. So you are essentially holding for a while.
And with the hope that the owners don't choose all sorts of things that owners can choose, right?
Like Barbados, that to my mind is not paying interest on its debt. No.
Yeah.
So I spoke to the Barbados finance minister myself. I asked her about it, and she said officially nothing.
I see.
Yeah. And that's not what you'd want to hear, right? But we know Barbados has gone through their challenges. They're still going through their challenges, and they seem to be headed towards what could be the end of it. But look at it this way: they are just signing with the IMF now.
Yep. People are saying they're where we were in 2009.
Definitely.
Yep. And that's the same feeling I got when I was there the other day. It was they're very much going into a IMF thing, and you can tell the uncertainty from people, like, what does this mean? And guess what? They don't have a junior market.
Right.
Yeah. They don't have us. They don't have 2.8 million people.
They don't.
Yeah. They don't have an active stock market like us. So we need to count our benefits while we have them, use up our benefits while I have them.
No question. And I think people, as I said, I know this is a very heavy stock driven discussion, but it's important. A lot of people don't realize how a stock market helps a country growing. Because if you have a company, if the only place you can go is a bank, suppose your business has no collateral, so to speak, to borrow, how are you going to raise money to grow? You can have a service business that has no assets on its books, but does $30 million a month in revenue. But it goes to the bank, and the bank is looking to its balance sheet. All it sees is cash in the bank and share capital. Receivables, payables. There's no building.
Yeah,
there's no loan.
There's no factory stuff. There's no products, no raw materials.
They pay rent and whatever.
Yeah.
But the people in the building generate all this money.
Mm-hmm.
Really, that company is going to have a much easier time getting cash through the stock market. Two investors like myself would look on and be like, well, that's a great opportunity. I want in. Versus the bank, because the bank is not built for that.
You're 100% correct.
They're not. So you can have, and I mean, I know the Barbados environment relatively well. I've been there a couple of times this year. You can have entities that are just stuck at this level and they can't get financing to go to the next level. So you know what's actually happening?
What's that?
People from other countries are going there to try and buy.
Ooh. Yeah.
So you'd have seen VMIL did something there.
Yes.
Trinidad, you had GenAC buying there.
Yes.
And it's starting to become a thing.
There are other people there. I contractually can't say something, but there are other people
there I'm sure
who are actively approaching that market and looking at it as an opportunistic market. But I don't mind it because they're Jamaicans. Yeah?
I mean, and the day, this is the reality of things. So their version of stock market is acquisitions. Outside acquisitions. Because you can't engage internal capital because it's not like investors are going to go give a banker money to lend. So they either have to have private equity or a stock market.
Yep.
And as a company grows, then you will hire more people and, some people may come back home, whatever. And you're an employer.
Yes.
So that's how critical a stock market is, which is why junior stock market, again, not to, toot anybody's or ring anybody's bell rather is
you guys are determined to turn this into a politics podcast.
No, I'm just saying it's not to do that, but it's just to say very importantly that development was very important.
Yes.
Because again, it provided a means through which companies can attract capital and grow.
That's true, 100%.
And that's how it's all connected.
Big up to everybody who was instrumental in that. I'll give two big ups to one to Don Webby. Sir at DG Webby on Twitter.
Yes.
And does he actually check his account?
Yeah, man.
All right, good guy. And I'll allow you to praise the man I had.
Alisha?
Yes.
Great guy.
Yeah. Still, I am when I have the conversations I have, I really respect what he did because I tell you, if he tried to do it today,
difficult.
Everybody would tell us why it couldn't.
He went through it. And you know what? The reason why it keeps coming up is not even politics. The fact is, people have made real money in this thing.
Yes. There are people listening to this.
There are people listening who've made real money through this mechanism. So we need to stop thinking that, because of politics, this is that and the other, we can't speak about these things. But the fact of the matter is there are people who've gone to the market with $10, $20, $100,000 and they're millionaires.
They make money, yeah. True.
And yes, people may say it's privilege or whatever, but the facts are the facts. And if you ask enough people, they will tell you.
That's the truth. You're a big up man like Ozzy did a tweet today saying that is his first trade, his first sale, 90%. He made it off Wigton. You can't knock that. I don't know or care if you want to say all of this is fake, real, rare. The man have some money in his pocket I've never had before.
Yeah. There you go.
Yeah. And guess what? Wigton is still around.
Still around.
Yeah.
And I hear people speak about IPOs negatively. And listen, and anything in life that's bad or good, you're gonna have bad with it, So there will always be people who will abuse these things. I don't deny it or do it wrongly. And you know what? The market is rational. It will do what it has to do. But guess what happened? Unlike schemes, rather, because the stock exchange is not a scheme. You get information every 3 months. You get business news updates every day.
Yep.
You get business newspapers, as I say, every Wednesday, Friday, Sunday. Well, you don't have Owen James going on anymore, but he's on Twitter. And you have people talking about information abundant
every week.
Twitter.ja. You have Finance Twitter.ja. Shout out to them.
Yeah,
you have all these mechanisms around the place now that are providing information. And they were still going to be skeptical. There was no information about only his friend, not friend and company, but his friend and friend and friend and friend and friend and friend and friend.
Yo. Big up the CEO. Sorry, I wasn't calling him CEO. Big up Dre Burnett. Brando attacks on friend and company.
It's friend and friend and friend and friend and friend. People talking about these things. And it's almost like a tight web, but yet still for a brokerage account, you just need to go into a broker and open an account and do your thing, and you get your information.
That's right. In fact, you don't even talk to me. One thing that was very interesting to me when I was going through that, talking to a friend of mine, and she said, "Let me tell you something. There's somebody I know who has become a millionaire or following your tweets, and I have never seen the person interact with you." And she went and she searched, and the person has never tweeted to me.
Wow.
I've never tweeted to them. I don't know the person, but they pay attention to my tweets. Imagine that. And that person is now a millionaire.
Wow.
No.
That's
I am not a licensed insurance or market anything. I'm not that, right? But you can't deny that. You can't deny the change.
The facts are the facts, man. And as I said, information is there for all. And some of these very people would love to invest and just nervous. And don't want to do it.
Yeah.
And I'm saying, listen, that's fine. If you don't want to invest, that's your thing. Nobody's knocking it. But let us who do have a relatively peaceful life.
Yeah, man.
Nobody's stealing from anybody.
Exactly.
Let's celebrate
exactly it, right?
each other's success, right?
What's
wrong with that?
Nothing.
That's
Literally
that's privilege, right? I mean,
it's privilege, but
I'm talking about what I'm doing as privilege.
That's right. And I mean, shout out to Lorenzo. I mean, as I said, D sent you. We just differ on that, and it's love same way, so no problem.
Let me hit you with something I know the people want to know. Them always want to hear. So what do you think about QWI? Can I ask you about QWI? I'm going to ask you about QWI, and I'm going to go to John Jackson, the controversial John Jackson.
All right, let's do
which
it.
I've heard that QWI, what do you think about it?
I think it was a great offering. I liked what it represented. I think if you're going to get convenience as an investor, it comes at a cost. And I think that pictures the reality of things. And as such, I view the investment favorably. But you remember, I view the market now, as if you come back to, I think we may have spoken on Twitter about this. I am not as optimistic about the market growing at this breakneck pace for the rest of this year, just because I think NCB, I could be wrong, I don't know, I don't have any inside information, just instincts. I think when you see them rejigging their processes, upgrading systems, that could have a hangover effect. I think this financial year will be better than last year because it just ended. But remember, if NCB is 33% of the market and you have other big companies 32% of the market, then it may not grow as fast. By that token, with QE having such a large position in some of these larger companies, then one may not necessarily expect it to grow that fast in 6 months. But then what happened in 7 months? 9 months. So, one can either then buy to hold or wait and buy. But I'm the kind of person, if I like it, if I'm going to like it in 7 months, I'll buy it now unless it's overpriced.
I get you.
You know what I'm saying? So for me, when I see it fall at IPO, it's not surprising because IPO is not a balloon that you just inhale and it pops and, you just get off. Someone needs to buy it at that price, right?
That's right. You need 2 people for a trade to happen.
Of
Two
course,
parties.
and it's 1.6 billion. How many people are who in that 1.6 are buying to flip?
Yeah.
I get you.
You know what I'm saying?
Yeah, I get you. In fact, going back to the QWI and his holdings, I mean, he holds a significant. I'm looking at the list right now in front of me. Fosrich, General Accident, Grace, Honeybun, Iron Rock, Jamaica Broilers, Jamaica Producers, JSE. It's a nice one. What do you think about JSE?
I like JSE. Remember I was at the briefing and I spoke about it. I thought the other day it fell to 18 and we're lucky enough to get some guys in.
Yeah.
Oh, that's nice.
Yeah, got quite a bit at 18.
Yeah, I wanted to, but I think I was broke at the time.
Yeah, I never got any, but
at 18?
No, I never got any.
You weren't broke at the time, then we spoke about it.
Yeah.
It was around.
Oh, yeah, I did get some.
And Cygnus was also Cygnus was attractive at the time.
I never got any. I actually bought, as I told you, I bought Scotia at 50 little bit, 53.
You're on that Scotia. Yeah. Hold on. No. I see both a tweet said nobody is on your side with Scotia. I mean, I'm on your side with Scotia. Yeah, but I see something up to, and John Jackson's on his side because he holds 110,200.
What's the average price?
His average price is $56.67. No. Apologies. That's how much it closed at the end of March. Yeah, but I'm looking at his old QWI. QWI came out with more than one. They upgraded the prospectus 2 or 3 times.
They did?
Yeah, they did.
All right,
Okay.
So
I've been looking at the early one, but speaking about John Jackson, I know if I ask you the hard questions because the guys on Twitter think that I'm going to say we aren't speaking about the thing that happened. So the context is that Observer or a newspaper article, let me not call any company's name. A newspaper article came out stating that he has not filed any taxes for about 4 years. And as a result, he is ineligible to sit on government boards, and he sits on 2 government boards. He sits on the JDIC, Jamaica Deposit Insurance, and one other, I've forgotten which other one. Development, DBJ. Yeah. You want to give your views? You don't have to give mine because people might say I'm following you. Let me go up front. Again, still don't know John Jackson. I mean, I know of him. I don't know him personally. Never met the man. But I'm in 2 minds about this. Somebody messaged me today and gave me. So I'll tell you the second thing that they said. I'll tell you the first thing first. Honestly, I don't care.
Same.
Yeah, I don't care.
It doesn't matter to me. It doesn't matter that much to me.
I don't care. So it's not matter. I looked and I said, hold on. I saw John Jackson and said, is it one of the listed company? It wasn't. Okay. Yeah,
it's fine. Yeah.
Secondly, the wording of the article was very clear. John Jackson's response was in it. He said that, based on the earnings, he wouldn't have to file.
Exactly.
And as you know, if you trade stocks in Jamaica, we have no cap gains tax, so he really doesn't have to file.
Right.
Thirdly, and this is my personal view, I use an example. If Jimmy's paint company needs a professional painter, right? And they hire me, I don't know how to paint, and they hire me.
Who wrong?
Am I the one incorrect, or is it Jimmy's Paint Company's? Jimmy's Paint Company's job to ensure that they hire a professional painter, right?
There you go.
Yeah, if I don't hold the paint qualifications, I don't blame me for that. I blame Jimmy's Paint Company, right? That's simply how I see it. So it was unimportant to me. Because I don't see it affecting any of the companies that he is linked to. It certainly don't affect QWI in my eyes. And my personal view is that him leaving those boards, because he did resign from those boards, which is the right thing, I think. It is my view, however, that Jamaica has lost.
I think so.
Yeah, because that guy isn't a joke. That guy is not a joke.
There's a reason he was invited to the boards in the first place.
There you go.
Yes.
I mean, as I said, like you, Randy, I really have no view on it. I'm pretty sure that he may come out one day and say, listen, everything is filed and current and keep managing the QE investments, So, non-issue. I didn't even read the article to that extent. I didn't call him. Why? It's not impacting my investment in any company, so I just read it on business.
There we go.
Other people, somebody else can follow up that one, but it's neither here nor there.
Yeah. To me, you have any strong views on it, Danhai?
No, not really.
There we go.
Bothered. I hear other people making a noise about it, but what's the real issue?
Yeah, well, I guess we're biased. I'm biased towards the money. Having said that, however, QWI below IPO, we said it when we started, but in my view, I had stated that. I mean, I tend to put a lot of pressure on John Jackson, but John Jackson isn't the only person behind it. Yeah, he has some strong people behind it.
Yeah,
it's just that people don't know them.
Yeah, that's the issue.
Malcolm McDonald is a top commercial attorney, and I mean, he can speak for himself. But he's a very clever, savvy businessman.
Yeah.
Cameron Burnett is a big-time investor. People just don't know the name of the holding company he uses, and I'll never say it, but it's there. It's been there or thereabouts. Those in the industry really know.
Yeah, people who pay attention to the ownership.
David Stevens, same thing. You may see him on some top 10 list if you know what you're looking for.
Yeah. Also plays in the international market very well, I suspect.
I believe so. I believe so. And David's a businessman.
Yeah.
Then you have John David. I'm missing somebody. Who's the other? John Mahfood.
Yes.
I remember JSE is previously used to invest at a time when people were not buying stocks in volumes apart from the few names we had mentioned there.
Yeah. They were making money.
Yep.
And they were making money. In fact, if I'm not mistaken, I think JSE may have even bought some overseas shares. So these guys are very serious investors. You don't do that for 5-10 years without knowing what you're doing.
Yeah, exactly.
And being competent, right? So I hear people talk about Jackson a lot, and that's fine. A great person, a friend of mine, etc. Somebody I respect highly. But that team is a lot bigger than people may think. And there were other persons who should have joined the board who could not have taken up invitation, who are worth a salt also. So I say all that to say this, that they really exercise careful thought in selecting their team members. And I really think they're going to do well.
Same.
I can't see John Jackson suddenly not knowing how to invest after doing it for decades.
After
right?
all this time?
After all this time, just suddenly just don't know how to invest. And guess what? He resigned from 2 boards and have more time.
There you go.
The joke is,
much more time.
everybody reads IC Insider.
Everybody. There we go.
IC Insider drop an article and you hear it, everybody in the industry talking about it. People who are just passive investors, they're talking about it. Because this man knows what he's doing and they follow him and they make money off of it.
Sure.
So, proof is in the pudding.
Proof
is in the profit.
That's exactly it to me.
Yo, let's talk straight. The man make $100 million in 1 month off in portfolio.
Yeah.
He caught up to, you've heard industry guys boast about where the mutual funds are this year, right? They're at 50%. They're tracking the market, blah, blah, blah. I mean, shout out to them for doing that.
Yes.
First year ever. Congrats.
Yes, big up.
However, homeboy did it in months.
What?
Months. That's that's like you learn to run really fast,
No,
and then you race against Usain Bolt.
that's a QE.
Yeah.
That's crazy.
In months, and it's in the prospectus.
That's
We see you see the increase in value from 1 month to the next. 100 million, just so.
You know, he was buying burrito at like $4.50.
Barry today, how much now? Today.
74 or something like that.
No, man. What you said? Barry not touch 90 something today.
Yeah, no, it traded down.
It traded down today.
Yeah, it traded down.
Right, let me give
I'm
you
interested in seeing the numbers, the next set of numbers.
Oh, yeah. Barita?
Yeah, next 2 sets of numbers.
Yeah.
Should be all right, right?
I think so.
I think the only thing for me is going to be, well, the investment gains. And I mean, we'll know for sure if any of it is anyway tied to the share price, because I think quarter over quarter it may be flat. From quarter start to quarter end.
No, I know. I checked that recently. It started at around 45.
Last quarter?
Ended June.
They're done well then. They're done well.
Yeah, and then but you have to remember this, and if they bought in the shares, they would have had to participate. They being the owners of the Barita would have had to participate in the rights issue, I believe.
So the rights issue that just happened, they're going to participate. They participated. It only makes sense.
Right.
They buy in at the rights issue price,
Mm-hmm.
and any difference there. So they buy in at $45 and say the price is at $75 on the day. Then they book that gain immediately.
I see. Yeah, that's cool.
So that's
good.
So 2 quarters are seen now. So the quarter just ended and the quarter we're in now.
They do well.
Profit.
Okay.
That's guaranteeing yourself a little bit of money. That sounds roughly to me like I want to say that sounds roughly like about 60-something% profit if you can do that way, right?
Yeah, it'd be interesting to review this and see, because if we actually nail it, can refer back to it and be like, yo.
Yeah, is that
you know where you heard it first, right?
Yeah, that's right.
Because you go on.
No, it's surprising to me the talk I've heard about Barita and like the responses from people to it, and some people it's almost like they want me to not say anything, or they want us to not say anything. You raised a point earlier.
We're not saying a bad thing.
That's the worst part. We're not saying a bad thing.
That's so smart business.
It's smart business that somebody's doing. No, does everybody like it? Some people like it, some people don't. Some people won't do it. I will tell you, I don't currently hold any Barita shares.
You're not right now, but I'm considering going back.
I'm not a shareholder.
Yeah. But I was a shareholder earlier, and I did book a nice gain. I did book a nice impressive gain from it, and I'm happy that I did.
Yeah,
I'm happy that I did.
Definitely.
I don't have a problem with what they're doing. It's an exciting market, and we want to see exciting markets. We want to see market activity. That's the thing most of all that I think pulls everybody. Market activity, because
definitely. It'd be good to see what they do at the capital. I think it could be very disruptive, and it would be good for the industry.
What do you think they're coming with, or you don't want to say?
No idea.
Okay,
they have mentioned new branches.
New branches, so they're expanding the
branch network.
But then
I don't think that's the most.
Kingston can't be that though.
Yes, I don't think that's the most exciting thing coming from this.
Nah, yeah, you know my rule already. Companies lie, and that's in air quotes, and CEOs lie, but the numbers don't. So companies on the stock exchange can't actually lie. So what they do is they have to speak very, very carefully. And CEOs are the same way. They have the same fiduciary duty. They're locked in the same way. They can't lie to us, but they can say something that sounds like what they want us to think they're saying. Not to say that they're lying, but sometimes that's how you keep the secret before you go. Because remember, even though they're listed companies, they do have competitors. Yeah. And right now, the competition in the market is a lot like the competition back in the telephone sector back in the day, right? It's still, except it's a lot more players.
Yeah.
It's good for us as consumers. Yeah. So I'm happy to see what they're having there. We talk about good companies. Let's talk straight into the thing people have been asking about. Trans-Jamaica. The highway. Tomorrow is the big day. Yeah, by the time you hear this, you'd have already found out about the listing
details and
and all of that. Yeah.
And I think it's consistent with all we've discussed. I think we're seeing now development. We're now seeing companies raising capital through the stock exchange, and the stock exchange being able to facilitate that.
It's crazy.
So now a man necessarily going to Maypen or whatever, pay this money. It may feel like, well, it's not all lost because I mean we're getting a nice dividend in a quarter or something. So it shifts the mindset of someone from just user to owner.
Yeah, that's a good shift. That's a good shift.
The only thing, but what I'm noticing, the government is listing big assets, and that's great. But one needs to temper the growth expectation.
That's in terms of Trans-Jamaica, or are you thinking overall?
In general, I think big assets, because remember they say elephants can't run, right?
Exactly.
So it's not like unless they're gonna buy another highway.
Yeah, exactly. So
that
you have to be seeking new business, not this business will grow in its own space.
Exactly.
What's going to happen?
And for the people looking for just how to apply that thinking generally, you see it in like a separate, you see it in like a Wisynco.
Yep.
Yeah, Wisynco is what they say, growing great guns. It's going crazy. And you'd say, boy, I don't think it's going crazy. 29% growth. But for a monster the size of Wisynco to grow 29%, that's huge. Yeah. NCB to grow, they have to, it's big for them.
NCB has to be outside of Jamaica. They have to say, boy, I have to take on the world.
Yeah. And they don't need to do as much to grow as a physical infrastructure entity like a Wigton or a Trans-Jamaica would do. So I think it has a fit in a portfolio. It's just a matter of, and this is at a cursory glance, but if it's a dividend stock, it has a fit. But then, is a person looking for dividends? So I would never say to somebody buying the IPO because it's going to pop, unless it's valued at $1 and they list it at 35 cents. Then sure, buy it.
Right. It's worth more than that. Go
exactly. Go crazy.
But there was some talk earlier. I don't know if I want to say this for future one. I know there was some talk that they're not necessarily profitable. They're looking for profitability in about 5 years.
Oh, I don't know. I don't know.
I won't put you on that. You know what? I'll tell everybody listening and wondering, read the prospectus.
There you go.
Yeah, read the prospectus. Prospectus isn't out yet. So we don't know. When the prospectus drops, we have an idea of what to expect, and everybody gets to start at the same starting line. That's why the max is so good. No matter how much money you have, them can't invest before you unless they already own the company.
Absolutely.
Everybody have to invest at the same time. So don't worry about it. Look at it.
I want to urge people to use this prospectus as a starting point. Like, you might have a lot of thoughts about the company before, at least, boy. Say a company sells bag juice, but as far as you're concerned, you see the man out there every day and no bag juice selling. But you're in Kingston and the mobile is popping off, but you just don't know.
You don't, exactly.
Prospectus are going to show the numbers.
Exactly.
So all your thoughts about the company before, those temper expectations, prospectus will show you what really happening in the company.
Yeah, man. I say that all the time. I say to people, I got a lot of people. I don't generally talk about the lab. People know me for not talking about lab. I will talk about this, doing that. A lot of people don't know what a marketing company is or does, and they just think, oh, marketing, no big deal, right? But you can take your thoughts about the company and just like you said, and I put it aside and go look at the prospectus, because that lays out exactly what the company is and exactly how much money they make and how much money they've made over the years.
The company's a big deal.
So you don't need to go with your guessing game or what you feel like. There's no need to guess. Go straight to the numbers and you'll know exactly what it is that it does.
Yep. The numbers tell a lot. So
yeah, the numbers tell everything, and the prospectus tell.
I need to say anything more.
There we go. No, you don't. Yeah. I'll leave it at that. Let me jump to a nice topic that we never spoke about last time we heard, though we should have. Investing using loans.
Yeah.
What do you think about it? What do you think about it, Danhai?
I love it.
Yeah.
All the time, all day, every day.
Yeah. I hear it's very dangerous,
Define dangerous. Like, you have to know your risk appetite. You have to know the risk of that, what your investment is. I know my risk. Yeah. And I've never lost on a loan investment to this day. So
I mean, to me, it's like I kind of wonder when I hear people mention like danger. Like, you have guys who, you know what's dangerous? Not having enough cash to meet a need if it should arise.
Oh, preach.
You know what I mean? That to me is dangerous. So like, I said to people, if you can't, so I say sometimes you need to have like critical illness insurance, not because the agents can be annoying or they're not reliable or whatever, but the fact is, you're in hospital, even if it's $2 million and it can help. Using $2 million, you don't have to go in your pocket to find. It helps. Life insurance is a personal choice because them time is dead anyway.
Right? Yeah, that's true. That's true.
I will save thoughts on this matter.
Three views and a pod there. Yeah.
Here we're going to go with the loan now. People may say it's tricky and margin call, and not going margin call. Let's just say it's a straight loan. Suppose you borrow the money at 12%. Right?
So you walk in the bank,
12%.
I got BNS, I borrow
$200. Right, 200. Let's just keep it.
12%.
And your portfolio is 400. You borrow 200. Right? 12%. That's $24,000 a year. Right? It's $2,000 a month or whatever. Straight line. That's probably look more. Okay, put principal in it. Fine. Long story short, if you can pay $2,000 a month out of your salary, there's no risk,
Yeah,
that's true. Because you're servicing the loan.
You're servicing your loan.
That's right.
But suppose the 200,000 becomes $1 million.
then
True. How would that be? 500% growth. That's like if you had borrowed 200,000 in November and bought Barita. Yeah, you would have had it.
You'd have $1 million.
Yeah.
And on money that you never had before. Like I never took any of my money.
Yes.
And made some money on it. Like,
yes.
Suppose I want to pay off this loan, give them $200,000, and
you pay him, and you have $800,000.
I never had before.
But then when you do that and you go through the risk, right? Somebody may look at you and bad mind you.
Boy.
But I don't know the risk.
Exactly.
They don't know what you're doing.
Exactly. Exactly.
Because you go sign up loan farm, but then you see somebody else would much rather have the loan in hand right now and take it and go on vacation or something and come back more stressed out than when they left.
Yeah.
But then some of us would just say, you know what, let's try and get some things in place first.
Yeah, but I can't speak. You're right. The stability that owning a good portfolio brings is great. And the ability to borrow and do that is amazing, man. Trust me.
It changes everything. Like the way you perceive life in general, everything changes.
Like where I'm right now, because of my portfolio, I'm good.
I could not buy my portfolio now.
I couldn't buy my portfolio 2 years ago. I couldn't buy my portfolio a year ago.
I'm saying
2 years ago.
I'd have to save 10 years to buy.
Save. I've never been very good at saving. Shout out to the people who struggle with that.
I could not buy it. And I respect anybody who can save and all that, but I just couldn't buy it. And I do all right, but I couldn't buy it.
Yeah, you're right. You're right. You can't buy it. Think about it. I think all of us here have done a couple of what they call triple baggers. Yeah, we've done the 100, the 200, the 300%, the triple digit growth, right? Yeah, there's no way I could do that because it's me scraping and getting something and then it grows 300%. Exactly. And I take it out and put in something else and it grows 300% again. I couldn't catch it up.
And I tell people, you get paid 12 times a year.
That's true. That's true.
You get paid 12 times a year. Think about that.
So
12 times a year.
There's nothing you can do about that. Literally 12 times a year, you can use it to either live your life and maybe save whatever, or you can use the service alone and take that loan and do something grand with it.
And guess what happens? You may save and be diligent and all of that, and then you broke your foot. 300 grand dead. Yeah. Or you have a child and your wife or your girlfriend have to have a C-section, $400,000.
Boom.
One thing.
Yeah.
That you probably save $5,000 a month for 80 months to get to 400,000.
Crazy.
And then one fell swoop, boom.
You lose it. That's
so
true.
For the young person, so when young people come to me and want to invest in me or whatever, I say even if you don't invest in me, listen, just buy stock. Don't even bother think about fixed deposit or whatever. Make sure you have an emergency fund. If you're not crazy like me, well, at the time, so you emergency fund and then buy stock. But like you, when I was trying to do something, I put everything I had in Supreme Ventures at 3, Burge at 3, NCB at 30.
Wow. Say that again because people miss it. Well, let me say it again.
I had in SVL at 3, Burge at 3, yes.
Whoa.
And NCB at 30 something. And I kept doing it every month, and that was taught to me by Donovan Lewis.
Yeah, that's called dollar cost averaging, where you put the same
single month
amount of money in a stock every single month, regardless of the price, and just go on with it. It is better than saving.
And I did not want the price to go up because if it went up, it means I couldn't get more.
Yes,
right? So when people talk about bull market and wanting market to run, I said no, make it fall. I want to get in. You know what I mean?
You see when I'm bad mind your own stock, you say, boy, you know, say, can take a little longer, want some more money.
Yeah.
Come on, love the company. So.
Remember Signals? Randy,
oh God.
When Randy was first speaking about Signals, we were already looking at Signals numbers from way back.
Yeah.
And we were saying, boy, if we timing how we put in the money in it, because we don't want to run up the market. So we say, all right, cool, buy it. See offer it low, buy it. And then say, boy, make it, hope it stay low. See, start run. Say, we were so stressed. Yeah, because we say, we have so much money left and not all it in Signals.
Yo, let me tell you, say reach a point now, my lord, where we can, I don't mind a little bit of bad news for some companies.
Listen, so I think the other day when everybody had talked about Scotia is a sell, I said, oh, perfect.
Yes, it's a sell, man. Yes, man.
Perfect.
Yes, man.
I heard a broker say a sell. I said, lovely, let's make the price. You can't even get it now in 62. When I was here, it's like 53 or something, some month ago.
Wow.
And they declared a special dividend, so now everybody wondering what on earth these guys going on with.
So I'm cooking.
I'm not saying it's not my only stock, but the point is, I love when people pessimistic on stocks I like.
Yeah. I'm the same way because one, it allowed them to, especially if they tweet about it, start talking about it often, it spreads the words, it spread the word, it spread the information, and then people like us who know better and look a little further ahead see it, and people like us who look for the opportunities. There are always a lot of opportunities out there. Matter of fact, let me touch another opportunity that you have that we might talk about, which is IPO. So it's kind of related to the QWI, QE.
Yeah.
But it's related to almost everything. The impact of market sentiment on IPOs.
What do you think?
All right. So I think IPOs is like trickiest point of the game. Come out, everybody's idea of it, and say the brokers putting out their their report saying, yo, it should go down, and because the rate of sales below IPO price, that's where it should be.
Yeah.
If everybody takes that up, then price start drop.
Yeah.
And then the panic selling, like we have the QE the other day.
Yep.
Not even other day, today too.
Yep.
Panic selling, push it down, and then the market sentiment becomes not necessarily about the company. It's more about, boy, they start losing money for me.
Yeah.
And so it becomes a noise room.
Yeah.
That's it.
Yep. And the noise don't make sense. The noise don't make sense. Avoid the noise traders. The noise don't make sense because I asked somebody who told me the same thing yesterday. She messaged me and said, she thinks she's gonna jump out of QWI. So I asked the same question I ask all the time. I say, what was your plan when you bought it initially?
Good question.
It's the same thing I always ask. What's your goal? What's your plan when you bought initially? She said 60 to 70%. I said, when? Say in 2 or 3 months. I said, okay. So what you're really looking for is a pop. That's cool.
Fair.
So I said, fine, that's fair. You're going to look for a pop.
Yep.
All right, but no, you're not seeing it popping. What's up? She said she's going to sell. I said, all right, cool. What more I can say than that? What more I can say?
But sometimes the market sentiment goes in other direction. So that's why the pop comes.
For this one, for QWI specifically, I know there was some noise made about the compensation method that they've chosen for themselves, which is that they've pinned themselves to an index, an overseas index. I don't remember the indexes, but they pin themselves.
S&P 500?
No, not S&P 500. It's MSCI.
MSCI. Or it's emerging market thing.
The total market emerging thing. And the question is, why they're doing that? Because, the market now is the Jamaican market is way ahead. That's like my boss coming to me and telling me, say, I'm going to pay me 10 grand for every car I can paint. And then I painted 10,000 cars and go, boy, I'm never, no, you can't change it now. Because guess what? There's going to be a time when I can't paint 10,000. Yeah, but you can't hurt a man just because him think, no, but maybe you should have I understand the arguments for that, but I also understand that let me tell you something that I know from talking to international white people who don't know nothing about Jamaica. The man, you hear about this emerging market thing, and you hear that they link themselves to the emerging market fund. Okay, cool, I can understand that. You hear them link themselves to a hybrid of the emerging market fund that's also mixed with no. People outside of Jamaica don't rate Jamaica. Let's all be honest about that. When it comes to life, we know what we have here, but the rest of the world don't know yet. And when the rest of the world find out, it might be too late for us. So no.
Get crowded out around
yeah,
the market.
exactly. So you can't afford to have that happening right now. No. So I understand the man and pin himself to it, but going back to the point of sentiment, I see we've seen an element of our sentiment. And I've seen it with QWI. I saw it with Sagicor Select also. People are just expecting the pop. It's a pop.
Yeah, and I think though those companies serve a purpose in that they allow the average everyday person to just get a portfolio. to get a portfolio. And that's very, very, very important because it soaks up liquidity and it provides access to the market. So my thinking is that I think these investments have their place. Many people benefit by virtue of participating in them. So I think the sentiment now is one of openness, but I don't think that anybody is, well, I won't say that. I don't think everybody is saying that the market is without risk and all that, because if I can tell you, my understanding is that I don't think anybody is selling their house to buy stock. Truth be told, I would do that.
I would do it.
But nobody, the average person is not doing that.
Yeah.
In fact, the average person doesn't invest enough. Because if you check them, they may have that new iPhone 11, but they don't have a portfolio that's $200,000.
That's true. That's true.
That to me is misplaced priorities. You know what I mean?
Yeah, but here, you have people who are saying, I find that it's a fear. That's one of the things I try to get rid of all the time. It's a fear. People are fearful of the market, and so them go, well, I have 200,000, so them tell me them have 50.
Yep.
What must be the 50? I had to tell a friend today, I say, yo, I can't give official advice, but here's what I can tell you. I'm not going to be frightened by any amount of money here. You're not going to tell me you have 10 million, I go, whoa, you're rich. You're not going to tell me you have 10 grand, I say, whoa, you're poor. What I need to know is what you have, because the market works in such a way where you have to, what you do is dependent on the amount of money you have. Yeah, the play that you make when you have 10 million is different from the play that you make when you have 10 grand.
Sure.
And so if you hide how much you have or split your money, you're doing yourself no favors. Sure. And I'll tell you this, there is no better investment right now than the JSE. There hasn't been for, I am going to say personally, it hasn't been for maybe the last 15, 20 years.
It's been a while. I mean, it's definitely been a while. I think the US market had a good run, particularly when you had the younger tech stocks like the Facebooks, Googles, Apples, all them. Those did very well, no doubt about it. And those presented great opportunities. But JSE has beat S&P in whatever dollar currency return last year, this year, the year before that. As once those companies got mature, and that was just a tech era. Yes, you had some others who did fine. But Jamaica Stock Exchange has been a competitive market for years. You are companies are paying dividends of 10% off the bat. Not because price run up or whatever, just off the bat. Carreras at one time was mid 15, whatever.
That side. And Scotia is about, I think.
Scotia is about to get in there. SVL too.
I described SVL last year. How was I describing SVL back in the group days? I think I described it as the new Carreras.
The new Carreras,
because it's just being set up to run very efficiently and send all that money back to shareholders.
Look at the efficiency now.
So, I mean, I say that many times people frown on the markets. And I say, I don't really talk about what I do in the U.S. markets a lot, but it's significant. And I said that to say that despite that, it's only important because I still said to some of these same people, do not sleep on Jamaica. In fact, we've had people convert, not I recommend it all the time, but there are people with the risk tolerance to convert the U.S. who bought Jamaican stock, and it was still a significant increase when they converted it back to U.S.
Wow. Wow.
Yeah, man.
Wow. I always have some questions. People don't know, so I always have, a lot of times I have an audience here whenever we record a podcast. This time we have the guys from the BAMcast. I should big up BAM Production Studios again.
BAM,
so there's BAM and there's BAM and Bob of the podcast. And I think Bob have a question. Bob getting a chance to ask three of the sharpest people I know about stocks. Bob, no pressure, but it's a really good question.
It is an exceptional question.
That's right. Confidence first.
Definitely. So y'all spoke about the highway.
Trans-Jamaica.
And I remember seeing in the news about it that one of the side parts that they spoke about was that the market cap in the JSE is now over $2 trillion.
Thanks to QWI.
Which so it has doubled in the last year or 2 years, something like that. So that's a very positive sign. There are more companies coming out, as you guys said. There's more capital, more people investing. There's more talk about stocks. When will the shoe drop? When will the other shoe drop is the question.
When will the
you can't have perpetual growth. So when do you see the slowdown and the fall coming?
I like that question. I'm gonna change you. I'm gonna hit you before Ryan, who's a good guest, to answer. I'm gonna tell you something how we look at it this way, right? A lot of your questions, I think, are those type of questions. I think come from a place of, I don't want to say poverty, but we have been used to a long time of not making any money. Let me tell you something. You say you don't have no money, and you start make $5,000 a week, everything bossy. You start make $15,000 a week, things up. But you know the truth is, you're just making $15,000 a week. You're not really making money. There's money out there. No, we have a thinking in Jamaica oftentimes like we expect that things are up and so they're going to fall down. My personal view is that we're not even up yet. We're not even at the level that when the market stabilizes, where we're going to fall to is not where we are now. It's going to be higher than where we are now. Right now, well, Ryan, I know will tell you about some of the things that drive what makes the market seem big. But the truth is, the market not big yet. We just reached the end of the 10-year of the junior stock exchange. Access is just about to go out as a main market company, graduate to the main market. The LASCO affiliated companies are about to go up. We haven't even seen, the country, Jamaica, has not yet seen 3% growth. You see, when we see 3 and 5% growth is not a magical number, you know. Growth is literally the companies in Jamaica and the people in Jamaica making more money.
Cumulatively, right?
Yeah. Mm-hmm. We don't hit 3% in 1 year.
Correct.
As yet. That year, I want to own stocks in Jamaican companies in a year and we hit 3%, because if you think we are going good, no. Yeah, so when we hit 3% and things slow down, then we can talk. Well, yeah, I know it feels weird because we haven't done this before, so it feel like, yo, we must fall. What people say is like when the bubble going to pop a lot. That's what people say, yeah. Right. But it's not a bubble. The example I gave Danhai the first time we spoke was this. Imagine a child at 6 years old. Well, Bobby, you just have a child. So you know this. Your daughter at the age that she is now, right? She's going to grow very, very quickly. And when she's at 3, she's going to be here. When she's at 5, she's going to be here. When she's at 7, she's going to be here, right? Imagine when she reaches 10, she's here. And you say, boy, I wonder when she's going to drop back down to the height she was when she was 3. No, we're growing. There will come a point where we level off. And there might even come a point where huge sentiment, can push us further ahead of our fundamentals, right? But we're not there yet. Yeah, man, we're good right now, man. We're good and we're going good. And this is not blind optimism talking. This is me looking sensibly at this market and other markets and how other markets that have gone through their growth phases have reacted. People listening, check out the Singapore market and what they went through in their life. Singapore now is a strong market. Check out even the Hong Kong Stock Exchange, the Chinese Stock Exchange. Yeah, check out not the Hong Kong one, no, but the Shanghai Stock Exchange, and see how they're moving. We don't reach nowhere yet. If it's a bubble, the bubble isn't formed yet. Mm-hmm. Yeah, man, we have ways to go. You'll know when a bubble is forming when obvious rubbish is being listed and raising big money and continuing on, and it is obvious rubbish. Now, there are people who listen who say, no, but I won't call any company name, but there are companies who have raised ahead of their intrinsic value. Those companies have been punished very, very quickly. Mm-hmm. There are companies now that haven't reached back their IPO price yet. And you have other companies who are great companies, and I will say like QWI, that today is below its IPO price, and that's a great company led by great people. So when I reach a bubble yet, trust me. When we in bubble, things that are like QWI, there'll be no question that they're so good. They'll be flying. So don't worry. If you're putting on some money, put on some money for your daughter in some of these companies. Yeah, she will thank you later on. So yeah, we're not at bubble yet, but I'll let my guest answer.
Randy has really answered it comprehensively. I'll also say though that we are nowhere near to optimal efficiency or optimal usage in our economy. So somebody brought up a number the other day. I'm yet to verify, but a respected person said, well, 11% of us have bank accounts or banked.
Yeah, 11%. Wow.
Now, that may not necessarily be. It's difficult to open an account, as you say, right? But if it's 11%, then the informal economy is so robust, right? Suppose more of that becomes formal. What will that look like in our economic growth numbers? I kind of try to tie the stock market to something in the economy. So the other day was, whenever it was a month ago, I was here and I was talking about like devaluation of prior years. But now we see the dollar go up and come down. At one time, it was just going up nonstop.
That's true.
So you start to see that we're becoming, or we now have a relatively stable environment. But people are still wondering, like, it's the dollar at 138 and be like, yeah, man, it gone 150 now. But now it's a downward pressure on it at 134. But that's driven by stuff in the economy. Like, you have needs that come up. Like New Fortress was building a plant, I think, for Jamaica, and they need 180 million US. So that puts some demand in the US, and that may have contributed to the run-up. What I'm getting at is the stability we're seeing in the market now is merely setting the field for growth and the bubble, so to speak. But as long as the economy is at 1%, 0.7%, 1.5%, even if the market does 15% a year, that's still great. But here's the other thing. The market is still dominated by 5 large players.
There we go.
But there still could be another 5 that list, right? When that happens, that soaks up more cash. Those companies get cash to grow, right? By virtue of that, more people have money in those companies. More people are employed as those companies grow. So then you have further economic growth.
Plus, those people make more money. Those investors make more money. Right off the bat, and all of them won't stay. Some people go and take their money, cash out, and that money don't disappear. It's yours.
And something else, people, it doesn't come up in dialogue a lot, but I've observed it. A lot of public companies now are led by Jamaicans that have returned home.
Yes.
So they come home with greater expertise and are able to drive these companies further. So again, those are the other things you start to see that will contribute to economic growth, and it may create a bubble, yes, but we're nowhere near that. Until we get around, say 3%, 4% growth consistently, then we can probably start to say, well, we're getting somewhere in that. But 1% is not.
1% is not. That, you know what that is? You know what that is? It's 18 months that we were able to pay our bills. Yeah, that's exactly it.
And so what we're now coming from is a famine to normalcy.
Yeah, you're right. We're coming from famine, Bob.
We're coming from being malnourished to nourished.
Yeah.
But we're not overweight yet.
Yeah, we're not overweight.
You know what I'm saying? So skin and bones and fine, we'll probably flesh out a little bit in some parts, but the legs still maga, and you know what I mean, the belly still bang a little bit, and exactly. You know, so we still need to, infrastructure so we can get to other areas faster. Still need more areas of commerce. If we had more equivalents of Alpart in 3 other parishes, like a St. Mary, because St. Mary used to have grazing with like bananas. But then Ivan blew that down 2004, and that was the end of that. St. Mary has not been the same since.
That's true. They had to move the production to Damrep, I think.
The producers.
A good amount of it comes from
That Wisynco now owns 30% of
St. Mary.
And they raise cash and stuff, man.
You see that? Yeah.
So you see the connections and how things start to develop a bit, but you still have outside economies growing as a result. Nothing wrong with that. But we still need more things or more diversified areas of economic vibrancy.
Yeah.
So until that happens, I mean, we're still only selling to 6 parishes for the most part.
Yeah, country don't unlock it.
There's a lot of places that
country don't unlock
Ryan's
it.
point about us not operating at optimal.
Yeah.
Kingston and nowhere else. Like most of our job market is in Kingston.
Yeah.
Imagine if all of Jamaica was service in Jamaica.
Yeah.
Is in Kingston.
Yeah. Think about this. We made a lot of money off JetCon. JetCon has one location. One public-facing location, really. Right? They don't have a presence in Trelawney. They don't have a presence in St. Thomas.
All right.
In St. Thomas, full of cars that JetCon sell, the type of cars that JetCon sell, and they don't have a presence there. JetCon operates as a listed company in a industry that there are how many car marts about?
No.
Yeah, man, we don't do yet. St. Thomas don't get a KFC yet. Think about that. You say you can't get the Obiam and the chicken bones. Yeah, right.
So imagine if jobs economies start reaching outside of Kingston.
In a major way. Because you have Mobay and all that, but a lot of it is tourist driven, and you have other areas of growth in Mobay and all that. But Mobay this has grown 6% a year last, however many years. Great. But you still are not seeing it spread across sufficiently. And you have Great George Street in Westmoreland that's fantastic. Every major business on that road. but then there's several others, right?
Mm-hmm.
And then it's employment, but then increased employment. Are these people earning more?
There we go.
And we see a lot of listed companies moving outside of Jamaica, starting to make acquisitions in other Caribbean countries, in America. So
Jamaica Brawlers, you're asking?
Yes.
Jamaica Brawlers, yeah. Jamaica
they've been
Brawlers.
big in America, and they're going to be bigger now.
Yeah.
So
yeah.
those type of things happening. We're not there yet.
Yeah, I like to wrap those things into a stock point, right? Think about this. It's like a secret thing I think when I was driving earlier, right? If the market cap of the JSE now is 2 trillion, every time a stock trades on the JSE gets a cut of it from the CES.
Yeah.
Do the rest of the math yourself.
Yeah.
Right.
So even that is a growth opportunity. And as I said, we still need, before we Cinco, we'd be hard pressed to think of another major company that listed in our consciousness. I think Jamaica Brawlers listed in 1994. NCB was before that.
Yeah.
Scotia was before that.
That's true. Yeah, those major come separate than them guys.
Is donkey years
way before we come see them things. Yeah.
The point I'm making is how many other big companies have come up recently. Finally, hear some, you hear ARC thought they want to list, but then Tanquil is not public.
Yeah, you ought to love New Fortress to list though. If they can list here. Yeah.
So those are all major entities that would, that could provide an attractive option for investors. So
yeah, man. We
don't even start scratch the surface yet. Which is why you can have a Trans Jamaica coming so soon on the heels of Wigton.
Yes.
That would have been like a next year thing.
Yeah, the market would have dry up. But look at it now.
Yes.
John Jackson went against a lot of industry sentiment and still had no issues upsizing his offer, his company offer, and collecting fully. And it was oversubscribed, right? Yeah. I don't know if 10 years ago you could have pulled $1 billion like that. No way. You pull $1 billion out of the market, everything dead for the next couple of months until people kind of recover and whatever. You couldn't do it. No it's normal.
And we Cinco. During that time, we Cinco Fast Reach. A couple of them we still around the same time.
Yeah. Yes.
And the market everything was the whole market was starting going down.
And a lot of people think that these companies just all of a sudden got up and decided they want to list. A lot of them wanted to list for a long time, but the value just wasn't there because they were not going to list their companies on 4 and 5 times earnings. And I'm saying that because that's what a CEO of a large company has since listed had told me. They were looking on the market and they said that we just can't list. No, we're not listing the business at 5 times earnings. When it was 15, they said, all right, well, we'll take a lick now. And they did go public. So now the stage is set and we just need the actors. And we're getting them one by one and they're coming in flurries now and all of that. And it's great to see. And if you have that, then you have more institutions that can put money in, which is why Access closed so quickly.
Yes, that was very quick.
Yep.
Today the allocation come out.
What did you think about my idea about Sir Marcus James maybe going and find himself a nice bond, pulling the company back and paying the penalty and just delisting his company?
I don't know if he would. Well, you'd have to ask him. But for me, I don't see why he would do that. He's been running a business. He's done very well. And
he's also had a bit of a rough time though.
Yeah, it's a profitable company. Started and
so own it all.
That. Nah, come on, don't need to that. Probably at a point now where it's done so well. So I don't mind running it and growing it still, but all right.
And dealing with a big shareholder and a bunch of small
he's
shareholders.
The biggest one now.
He is. That is true. It's now his thing. Yeah, that's true. Did he? If he bought up any? Or we won't know. We'll know when he. I would think that he would take the opportunity to go to 49.9.
Yeah, I would expect that.
I'd expect that at least, but it'd be good if he just took the extra step. Yeah.
I don't see that happening.
Yeah, you don't think so?
No. Even if there is a mandatory offer which is yet to surface, we'll probably say, I'm going to cap it at 79.99%.
Wow.
And not delisted. That's an option, but again, I don't.
I did that. I could see him doing that. Yeah,
I could see that.
But if you go, you can go that far without paying any penalty. Yeah,
you're not delisting it. It's just like Dolphin Cove, right?
Yeah, in fact, he can go full 80%. He can go 80%. He can go above 80.
Yeah, he can.
He can go 80 flat. Right. Yeah. Well, I hope some interesting things happen there.
Those are options, but I don't know if why take on debt now. Maybe.
Yeah.
Who's to tell? Anything's possible. Really.
We'll do a quick wrap. I like how heavy and people like when you have in here. Let me ask you a lot about MPC. We spoke about that the last time.
I like MPC.
Yeah, and I know they're doing a.
Yeah, I'm gonna get some.
Yeah, what I'm calling a second IPO.
Yeah, I'm getting some.
Essentially,
I'm buying some. I'm buying.
It's a nice company. It's a nice long term.
I like.
And just about 10%
I like the
dividends.
diversification. I like the diversification it offers. I don't own any Wigton. And I like the exposure outside of Jamaica. I like the fact that they are paying dividends. Which is, it's attractive to me in light of what I'd be hoping to get.
And their setup is one that is almost pushes them to have to pay dividends because what we have listed here is just a piece of a bigger group.
Correct.
And we know that group is going to need money all the time, and to get that money, it has to push a dividend.
And then MP and New Paradise Park is the cheapest form of electricity JPS gets now.
Oh, word. It's cheaper than wind. Yeah.
Imagine that.
Right? You have that on good authority, or you have that as facts?
It's in the papers.
Okay.
It's in the papers. In fact, the CEO said it. I think it was the CEO. It was in the papers. I read it. I never heard it from anybody. I don't discuss anything I hear from anybody.
I know. But I wanted to make it clear because I realized that what happens is that whenever we talk like this and I just ask you, I know you wouldn't do that. People assume that there's always some insider. No. Guys, let me tell you something. You can get very, 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 very rich off the stock market without knowing any insider information. All you need is the newspaper articles, the ability to read, and the ability to think.
Yeah, but most people don't even want to read the newspaper articles.
But that's the truth, yeah.
That's the problem.
That's the truth.
But yeah, so I like the Paradise Park project. As I said, Angela Rainford was my neighbor growing up, and when I heard her talk about the whole experience of building the business at the Diaspora Conference, because she presented, I also had the opportunity to present. I was very moved by it, and I saw the economic viability. And I don't mind holding some of it for a dividend play per se, and then particularly if it's undervalued, because remember, you're still buying it without it realizing the full revenue from the project.
Yes.
So what is there not to like about it? So you see the growth, right? The project's done. Right? And if there's debt in the business, chances are they probably can get it at a lower rate. No, they can refi because the project's done, it generates cash, the risk is lower. So that can reduce cost. Should it come to it, and assuming they have debt. I have the prospectus open on my computer.
There we go. Yeah,
I haven't been able to read it fully. I read it tomorrow. So I like it. I'm very excited about it. I think it'll be a good investment, and we try to get some. And as I said, for myself, I'm definitely gonna get some.
Yeah, I really want to the reports going to come now.
Huh?
I want to the report.
Yeah, I come now
this quarter.
When I talk about like what they got from Paradise.
That's a good. Yeah, I'm excited about that report. Yeah,
definitely. Because that should be when's that coming out? That's like mid-November, right? Unless I bust it before.
Yeah.
Excellent.
Well, they might drop it early in light of what's happening. Quick shot to see Wigton. Why?
Well, my circumstance was different, but I didn't take it up. I really wasn't interested. I don't really buy a lot of IPOs. I don't buy a lot of IPOs, and I'm still growth driven. Maybe not as much. Still am now, but I already have some exposure in areas that I think have growth upside. So now I kind of want to balance it off. I'm a lab shareholder too, so I kind of want to balance some of that exposure off with some more stable plays to give me a more balanced portfolio. I didn't. Wigton, great business, I'm sure, but an engineer said to me, wind energy perhaps is not as efficient as solar. So for me, I just thought
the wind is wind is more efficient than solar, but the costs over the long run are more in wind than solar.
If you want to just think straight off, just as a nerd, wind involves a moving part, the solar doesn't.
The solar, So the solar can only convert as so much of the energy that actually hits from the panel.
Okay.
Yeah.
Whereas the wind, almost all of it goes because it captures the motion.
Yeah.
But the wind, you said the wind cost on the back end is more than okay.
And the wind is not available everywhere. Yeah, the two best areas are the places where Wigton is now, and it's a little spot out in Portland that's very difficult to get to. Yeah, so I did a little bit of wind research when I was writing my piece for it.
I think the net effect is still that there's still.
It's always better than a gallon of oil.
So so in that respect, then I was just kind of. One, as I said, I was waiting on another opportunity at the time, so Wigton just did not fit. I don't buy IPOs, and if I buy it, I'm going to want to hold it for a long time, and they have to replace that set of turbines, the first set, in 5 years. So I didn't want to be exposed to any of that. So
I understand that.
People bought in, did well, fine, but I wasn't counted among them.
Yeah, I can understand that. I bought in, I jumped out, I bought back in, and I might jump out both times at profit. That'd be nice. Cool. How you feel about NCB? You said it's flat. I feel the same way.
I think it's flat. I managed my exposure. I reduced it a bit for the time being because I thought that, one, obviously I'm exposed to another company. Two, I really wanted Scotia, and I was not really comfortable with the capital adequacy ratio of a national commercial bank. But with that said, it's buying at 30 and 40. So to sell half at 215, I mean,
that's fine for you.
Off my back, right?
Yeah, I am also, believe it or not. I mean, not exiting completely, but exiting heavily. I think there are things that can grow while they fix the GHL group and put it together.
I can wait on them, and I mean, let's see what next year brings, right? Maybe at that time we decide to take a touch more and keep it going.
Elite.
Never been interested.
Yeah, not even now? Don't think they might be doing good now? What do you think, Danhai?
I think I was looking at numbers. I think some of the new product is priced in at this point.
You think so?
Yeah, but it's not up yet. But it's already, I think it's a quote unquote high PE right now.
Mm-hmm.
So I think it's already pricing in the new product, and that's not done. That's not online yet. So.
All right, I'm going to do something controversial here. Controversial for people who allow I think the emotions to drive them ahead of the actual numbers. Well, if you Fontana, I think Fontana is a great company. I like what they're doing. I like what they represent for Jamaica, and I think that people have liked it so much that all the gains that they're to get have already been priced in. When I say that, that means that the price already flag on where the new store, which everybody's expecting. I think that the expectation for the new store has sent the price all the way up already. If you know, I'm a man who I believe in the PE. Fontana currently has a PE of 34. As of today, 34 against a price of $8.40.
That's rich.
Yeah.
I wouldn't buy it that high, I think. But the thing is, I think the question is going to be to what extent will that new facility
provide growth?
Like how much it's going to bring revenues. It's going to bring a lot of revenue. Just a matter of how much revenue.
So
and how sustained.
My context
I think it's sustained. I'm not worried about
I usually look at a PE of around 20 for junior market.
That's me too.
And that PE is 14 above. So is it worth that 14?
I don't think so.
I don't think so.
Not to me either, but I know that's almost blasphemy to say. Funny story, something just came out. They have a dividend meeting today, which they have put off and have not set a new date for the new one.
They put it off?
Yeah.
And
I saw
fresh.
I saw dividend consideration.
On the
Fresh.
stock market today.
Yeah, man, fresh. The wording of it is...
What?
Yeah, man.
Hold on.
The wording of it is let me not get the wording wrong because I know people won't get this and some people might not be listening. I'll read it live for the people.
Yes, has been postponed at a new date has not been scheduled, right?
Yes, you know what that means? We were considering a dividend and we are no longer considering it. So I'm sure people were considering that in a lot of the things. I think it has been.
If you buy it at 8, I don't want dividends.
They should be paying $100 million a year in dividends, which is formally their tax bill.
Oh, wow. All right.
Yeah, so, a little high.
RJR?
No.
No? Yeah, you figured out what caused them to fly it?
No, I'm not interested.
Not interested in them either?
That was sentiment. Or RJR finally profitable for more than one quarter.
Well, I play devil's advocate. They opened us a radio station, I think Cayman. Not a radio station, an international station in Cayman. Gleaner starting this new viewpoints thing, which I guess is a new product. I got a nice mug. Thank you for that, Gleaner.
I mean, big up the Gleaner, but is that worth a buy?
Yeah.
Not to me. JSE.
JSE, I think no.
I'll have to look at it closer.
They close at $6.03 today, and that gives them a PE of 14.6.
Interesting.
Yeah.
I have to look at that.
Look to QWI. That's what I think is where JSE is getting the new profit. How much QWI does JSE currently own?
How much?
So will they price it as associate?
Or will they?
So they're going if they're below 50, then they use a subsidiary holding. So if it's no longer a subsidiary, then they don't consolidate it fully. If it's an associate, then they can have a share of profit from associate line, and those book the profit pro rata to their percentage holding.
And when John Jackson things like make $100 million in a quarter, and you put 20% of that straight to the profit line.
Yeah,
JSE is a nice holding, in my opinion.
Yeah,
that's good. That's interesting. I have to look at that. That's interesting. I have to look at that one. I never thought about that. Their shares available, like in quantities?
Yeah, man. Trade all the time.
In the six region.
Really?
Yeah.
Like how much? Like good amount.
I have to check.
Yeah, show me the queue after.
Yeah, I'll show you. People hear the money people talk.
John PE currently.
Yeah.
14. 14.
All right, no.
That's actually that's very interesting.
You know who else has a PE of 14?
Where?
Panjam.
14, are you sure?
Panjam at 104.
Extraordinary gain,
It's from JMMB. So you have to look to JMMB. Will they?
You have to back that out, though, the extraordinary gain.
So will they consistently giving J from JMMB? JMMB will do the Sagicor thing, new Sagicor. Some, if you can get some perspective on what the profit will be from that, then you can look at it. Then I can say, all right, cool. Then we can say a buy from that. Otherwise, then.
You have to remember doing. I was buying Panjam at 39 now.
Yeah.
So this
guy.
So at 99. So for me, for me to go look back at it now.
Yeah, I'm the same way. I sold at 100.
I want off, not really saying that.
Yeah, I bought in early 80s. I remember you and I spoke about that. Yeah, I bought in early 80s and sold at 100. So I took my 20%. And I'll be good. I don't think I have much of JSE I like, but JSE have a PE currently of 40.7 at a price of 27. So
I think people are optimistic about the change to the Nasdaq and the Canadian Stock Exchange.
Yeah. You know what? If you've been on the JSE as long as we have, or then you're fresh to it. But I can tell you, I personally have seen the JSE change its system either 3 or 4 times now.
Well,
so,
Nasdaq, I can recall 2 changes before this one.
Yeah. But Nasdaq. And
that would be a good change.
Yeah, and they've been testing it.
That's big. Yeah, I've heard. I've heard. I hear you can't see the brokers doing the selling anymore, the buying, but the thing is, has legs. The thing though that people don't bring up a lot is that, or the question I should be asking is, will the other Caribbean stock exchanges be transferring to it? Because if you remember, Jamaica, Barbados, Trinidad all use the same thing, Avento before, which would have facilitated a regional exchange.
Yes.
With them going to NASDAQ now, is Barbados going to NASDAQ? Because if that's not the case, probably the opportunity for a regional market is not as possible.
Well, you know what I think? I think the JSE
Jamaican list.
They could
just come Jamaican list, and JSE need to maybe start get aggressive, buy a couple of them exchanger and just wheel them in.
That's a good point.
Yeah, that's a very interesting thing. Yeah. That's a kind of entire rant interesting, people. All right, I'll wrap it, Ryan. Tell the people what you want them to take from this last time, because we're not hearing you until you're done your traveling here.
I think what's important is just to view everything in perspective and to connect everything. The stock market is not an abstract concept. It's tied to the economy. It's tied to the factors within the economy. It's tied to companies. It's tied to things like interest rates.
It's tied to people.
Devaluation. It's tied to the political, the political
landscape.
Stability. The
landscape, that is true. That is true.
These factors all play a part in the stock market. And as such, if you have any of these things being in a stable place, chances are the stock market will be a place that one can reasonably expect growth. Also, buy your IPOs with caution. Think about it. It's not you are discerning when women are going to buy shoes, men too. You don't just pick up the first shoes you see.
Yeah.
You try it on, you look at it, you check it, do 2 steps in it. See if it fit right. You need to do the same thing with stocks. Okay, you're not going to pick up a shoe. Well, most of us are not going to pick up our shoes. We like just bring it back a week later. Store may have to accept it, right? So
exactly.
There you go. So just to be discerning as one develops. Yes, there's some good IPOs. One can buy them, but it's not everything necessarily
that glitters is gold.
And guess what? Chances are there'll be another one that maybe fitting, to your liking. So I also say invest meaningfully. It may be $1 million to somebody, maybe 50,000 to somebody else, maybe 100,000, 10 grand. Make sure it's meaningful, because at the end of the day, the habit is more important than the dollar figure.
I love that.
But the same way you do with 20,000, 5,000, the same way you're going to be 20 million.
That's true.
If you're comfortable putting away 20,000 and it's 75% of what you have, you'll be comfortable putting away 20 million if it's 75% of what you have.
That's true.
So remember that what you do it little, you'll do it much.
Yeah, the attitude is more important than the amount.
Absolutely.
I like that.
Absolutely.
Like the people to a last recommendation, since you can legally do that. Me? Yeah, what do you like? What do you like?
I still like, I'm going to look at JAMT, but I'm still, and I tell you any thoughts within a frame, and I'll say to you, you're building a building, you have a foundation. You don't put on the roof, then the foundation. So if you're building, you want to have stable. You want to have strong companies in your portfolio. I like NCB. I think it's a strong company, but everybody knows that.
Yeah.
I like Scotia. No, I think it's a strong company, and stuff could happen with it. So everybody knows that too. I like Lasco. Lasco been around 30 years.
Yes. And we've only got to experience 10 of them.
They only got to experience 10 of them. Lasco has completed a 65,000 square foot warehouse that will cut its cost base drastically. And that makes it recession proof. So that should make it even more that should comfort the average investor even more. So I'd say if you have your strong stocks already, I'm looking at Lasco. Well, I have Lasco. I'll be looking at that. I will looking at JSE also because of their exposure to QE, separate from their core operation. And I'm also waiting to see a certain stock drop. And if it drops 30%, I'd buy it. And that stock is Kingston Wharves.
Wow. Kingston Wharves has always been good, but I think, Kingston Wharves has been my lesson one. So Danhai rap and tell me year 2. I don't say Kingston Wharves.
JSE already. I'm considering Barita because of the the 2 quarters that are coming now.
Yes. Yes.
That's 2.
That's it. That's the 2 big ones.
Yeah.
I mean, I'm still talking about Pulse.
Yes.
PE of 9.6. Yeah. You know what? I think the secret that the industry thinks that we don't know is that, one, a lot of the gains came from real estate, real estate revaluation.
Yeah.
So
it's
what?
a core business. So
it's part of the core business.
And look on this too.
It's consistent with the Jamaican economy. So what's one, assets are rising.
There we go.
It's going to happen.
If you push in real estate as an investment, which most investment houses are, most investment advisors are pushing real estate as an investment.
Everybody want to get rich.
You want your real estate increased by 20% or whatever. This is Pulse doing that. Pulse is real estate increased in value, and they book the gain. So I'm not seeing where this is a problem here. It's core. It's not a loss for them.
They have thousands of square feet of real estate on Trafalgar Road and in Stony Hill. I don't really understand why.
It's one of the areas where people can't get nothing right now.
Yeah, exactly. Why would somebody be resistant to viewing it favorably, even if you're not buying it?
Or the assets of the company are worth more. How you lose on that?
How you lose on that?
Here's something interesting I'll add to that, right? Do you know that the results that they just dropped with the heavy profit increase along all the lines?
Yeah.
It only included 6 months of that hotel being open?
Yes.
That's crazy.
So not 1 year, 6 months.
Yes.
Oh my goodness.
Yeah. And if you think that people are going to stop booking rooms in New Kingston right now, I have a bridge to sell.
Yeah.
To dividend investors, Pulse is now looking to pay stronger dividends
That's
from the new business and from I think they're level 2 from a management level, they stopped paying the management fees.
Yes.
And they specifically said these management fees will now be put towards stronger dividends.
Yes.
I'm not seeing where we're losing right now.
Which is essentially the man tired of him don't want to take it through an expense line anymore. He's taking it in a way where everybody have to eat.
Everybody
Check
eat.
man. So it's all good. You just collect it and lodge it.
Exactly.
Yeah, man. So I like Pulse.
I actually like Pulse. That's good stuff.
And you know what? I taking a hard bit on QWI just because it fell below IPO today.
Strong.
I taking a hard bet on it because of that. Yeah.
It already listed at a discount. The NAV is below NAV. So I'm.
And the quiet storm. SCIJMD.
Yes.
Cygnus.
That is still yet.
Do remember this. Pulse delayed on their results.
Yep.
Which means that their first quarter ends at the end of September, which, as you know, that was last week. Yeah.
Yep.
Cygnus, end of their first quarter was last week. They have 30 days to report, 30 to 45 to report. Yeah. It's going to be a very happy November for some people. It's going to be a very nice Christmas for some people. Q4.
Oh,
yeah.
It's Q1 for Cygnus.
It's my Q4. My Q4 is going to be really nice.
Yeah, man. But in the Q1 last year, they booked a loss, and the loss was only because of the exchange when they bought some US. They bought some cash
$5
higher
million
than
US at 135 or 136, like 5.4 million US.
That's nice.
That's not 129 or something.
That's not recurring.
No. That's
not
recurring.
something that
that's
they
true.
We buy $5 million US every year. No,
and the dollar has been pretty stable now.
Yeah,
so I like that. I think
they're
the people
not catching that spread. So
There we go.
Looks strong to me.
I have no issue with that.
There we go. The money's out there, people. I hope you enjoyed this episode. Thank you, Ryan, as always, for coming through.
Yeah, man, big up Ryan.
Yeah, man, big up Ryan all the time. Not say you say you're not. I don't want anything messy.
Let's see. I mean, I go away soon. I'm in and out, but maybe around. Let's see what the earnings season look like.
Earnings season for Q4 earnings season.
Maybe 15.
Maybe we'll pick it up. Yeah, maybe I can maybe bring somebody from finance Twitter here. Maybe bring back David or somebody.
Problem. Yeah,
no problem. Yeah, guys.
We'll be in touch, so work it out.
Big up. Thank you, guys. Thank you, Ryan. I've been at RT Row, Randy Row, and
Danhai.
And this has been earnings season with our good guests. 5 Soleil. That's right.
You know? There you go.
People ask me all the time, what does your name mean? 5 Soleil.
5 Solas of the Reformation, the Protestant Reformation in, what was it, 15...
In the 1500s in the Reformation days in mid-Europe,
1517,
That's
so
right.
500 years, 502 years now,
All right, that's right. Remember that, people. It's a nice Christian. Never forget that. The man don't leave him God behind him. Thanks, guys. See you next week.